We're live. All right, guys. Today I'm sitting down with Brad Mills. Brad is an entrepreneur. I met him on Clubhouse earlier this year. He's been in Bitcoin since 2011. He's an investor in Bitcoin companies. He was a Bitcoin entrepreneur. He was a miner at one point. He's a very interesting individual, very humble guy. Describes himself as a Bitcoin capitalist, which we will get into later. Brad is also the host of the Magic Internet Money podcast, popular Bitcoin podcast. He does it about once a month. Interviews Bitcoiners, high achievers, and shares their stories, origin stories to Bitcoin and everything Bitcoin. So with that, let's bring in Brad. What's up, brother?
Hello. Oh, I didn't know you were here.
What's happening, man?
Just
So
chatting
yeah,
with the
man.
legend.
What's going on, brother? Yeah, man. So I wanted to just, if we could, learn more about you, your background. I know you have the Canadian accent, so why don't you tell us where you're from, a little bit about your socioeconomic background, and your parents and what have you.
Yeah, sure, man. So I grew up on the east coast of Canada, Cape Breton Island. It's a small, really beautiful place in Canada. Actually, it's like a lot of culture there. A lot of people play music, writers, very creative, very easygoing, laid back. And the culture that I grew up with was actually not very capitalist focused. People kind of in Cape Breton have a lot of struggle. It's not as bad as some of the inner cities in the U.S., obviously, but it's like a poor area. Not a lot of good employment, not a lot of stable employment, lots of seasonal work. So when I grew up, I remember it was just funny. Like my first job, I kind of like my parents were kind of excited or whatever, but it wasn't as big of a deal as when I had my first unemployment insurance check. So I got like a much bigger hoopla over getting my first government check than I did for my first job. So, but what you do is you get your government check and then you go and you learn how to play another instrument or you go write a play or something like that. So it's just an awesome place to grow up, even though it was kind of like more socialist, but also at the same time anti-authoritarian, anti-government, anti the man. So it was a kind of a fun upbringing. I didn't feel like I was ever suffering really. I was in poverty or whatever, moved around to about 10 or 15 different houses, went to like 6 or 7
Wow.
different schools. But, it was pretty good upbringing by the ocean, lots of creative people.
Me too. I grew up by the ocean as well. Yes, I see you on we're friends on Instagram, and I see your dad's in your videos sometimes, and you link to his, so I go to his page and check him out, and he plays the guitar. You guys are all into music, I guess. That's pretty cool.
Yeah, he's like one of the best guitar players I've ever seen. He's awesome. He's great. And I kind of, as I grew up, I used to always say this like kind of as a joke, like the bit about Cape Breton and people not being very entrepreneurial and not striving for much there, except always respecting the creative side of things and the friendliness and stuff and the beauty of the island. But as I got a little older, I realized that my parents were entrepreneurs in their own way, and my dad was like a door-to-door delivery man, so he had his own food delivery business. He was like delivering pastries and pickled eggs and bread and stuff like that all around. My mom was a rep for a bunch of Ponzi scams. Like she was trying to make money selling Mary Kay or Herbalife or all this stuff. Like she was trying her best. She was trying to be an entrepreneur, selling candles or whatever to people. And then we actually started. My mom saw that I had an interest in magic when I was really young, and so we started a little family business where I would do magic shows for other kids. So it was like kind of child labor, but entrepreneurial child labor.
I
So
literally just go ahead.
no, I was saying I did have an entrepreneurial upbringing. Really, it was just not very successful.
I sold lollipops on the playground when I was a kid, blow pops.
Nice.
No, I actually just posted something the other day when I sold my company a few years back. I was bored, and so I started learning all these card tricks, and I used to videotape myself to playing card tricks and stuff. And I posted one on a stories the other day. I got to send it to you.
Oh yeah.
You probably know exactly what these card tricks are. They're like basic card tricks.
Yeah, I used to be into all that stuff. We did like live birds and stuff like that too. we'd breed doves so that we could like use them in magic tricks.
Let them go.
Had rabbits to pull out of hats and all kinds of stuff. All the cheesy stuff we used to do it. I did that for like 6 or 7 years.
All right. So prior to Bitcoin, what did you do professionally? You said you were an entrepreneur. What were you doing?
Oh yeah, so I wasn't a child magician for my entire life. I suppose that's should go beyond that. Um, I wanted to actually make movies. That was the thing that I went to school for comedy and for I did stand up comedy in Toronto a little bit. I did some sketch comedy. I wrote some plays and stuff like that when I was in high school and in college. And I wanted to make some money to make a movie. I really wanted to make movies. And then nobody would give me any money because I didn't have any experience. For some reason, being a child magician doesn't get you $100,000 grants from the government to make your film. So I didn't have the experience, and I wanted to make some money to make a movie. And I'm like, you know what? Screw this. No one's going to give me the money to do it. I'll just do it myself. That was like the Cape Breton coming out at me like, frig the government. They're not going to give me money. I'm going to do it myself. So I started Googling how do you make money online. And literally like that was my business school was like Googling how do you make money online. I was like selling gas pills, like scam pills and diet scam juices and all kinds of stuff. I was filling out surveys, trying to make $100 on a survey. Like 2004 was kind of like when I started doing that, and it was just a cesspool. The internet was just like almost as bad as it is now with DeFi stuff. Honestly, it's kind of like the same thing repeated. Auto surfs were a big thing. I don't know if you remember those back in the early.
Yeah, I did everything. I did ringtones. I did all that stuff too in the early days.
Yeah. So sign up for websites, and you got to do like a Columbia House subscription. Then you got to convince 10 people to sign up for Columbia House. Then you get yourself a free iPod. That's business,
I did. I sold body jewelry. I sold all whatever it was. I had all kinds of different spin up websites, and then it was all about like SEM, SEO, SEM, search engine marketing, search engine optimization, obviously. And but do you remember back in the day, there was things like Canoodle.com and 7search.com and like all these search engines where you could still get like the 1 penny per click on the smaller search engines, even though it was like 10-20 cents on Google. I mean, today there's like nothing anywhere like that,
So you were doing like drop shipping type of stuff?
Yep,
or affiliate
totally.
Marketing?
Yep, drop shipping. Yeah.
Right on. Yeah, a lot of people. I mean, not right on as in like, ooh, I want to go do that. Right on as in like,
No.
I had the experience too with that stuff.
Yeah.
Eventually, you realize, okay, this is kind of like
it's not sustainable.
Else.
It's not sustainable. Yeah. What I realized, Brad, is like as you're trying to do that, the CPMs kept going up, and then like within a particular bucket, as they would call it, right? The bucket being like whatever the keywords that you're going after are. What I noticed was, if I'm in this keyword, it got to a point where it was no longer profitable. The margins kept compressing to a point where it wasn't profitable. But the other things that were beating me out, I looked at their products and they were selling at a high ticket price that had higher profits and stuff. And I was like, oh shit, this is never going to work. It's not sustainable. So that's when I got into building out social media websites and stuff.
I kind of had something a little similar, like where I was doing all those like scammy things and those like really cheesy affiliate marketing things. And then I realized, and even network marketing stuff, like I was going down the rabbit hole of network marketing, like home-based business, be your own boss, all that stuff. And I spent a good year and a half in the trenches of trying to like make it work with network marketing. So I'm just like, I got to try to make $10,000 a month. That's my goal. I got to make $10,000 a month so I can fund this film, so then I can achieve my dream of making a movie. And I don't know if you have anything similar over there. Did you ever get into network marketing too? Did you go down that rabbit hole when you were younger?
No, I never did the network. I had friends that did it, and we're friends with obviously John Gilardi, right? So he's one of the best network marketers that I've ever met, actually. But you can make a lot of money if you're good at it. I never went down that. I shouldn't say that. I had a friend that introduced me to prepaid legal. If you ever heard of that one. So I hooked up a bunch of my business people I'm friends with, and I was like, oh, this is interesting because it's like you get legal services, and what you realize, all they do is send a demand letter or something. It's kind of stupid. It's not really legal services. Funny.
Yeah, that one, I signed up to that one as a client actually, because the law firm in Canada that represents you when you send letters, demand letters, is Mills and Mills. so I was like, well, this is great for me. I'm going to sign up. I'll be sending letters from Mills and Mills law firm, and they're gonna think like that I'm like the son or something like that.
That's so partners.
So I signed up for that thing, and I stayed a customer for like 10 years, just because the law firm is called Mills and Mills.
And so, what was that? So how roughly how old are you? How old are you?
I'm 39, I think.
You're a couple years younger than me. So we're in that same era, the earlier internet days, basically the early 2000s.
Yeah, and like during that time, actually, one of the things that I learned, like I promise this gets back to Bitcoin. It's like the internet was developing e-commerce at the time and payments, and PayPal was kind of an upstart company at the time, and there was also eGold, and eGold like was digital gold. It was the PayPal version of gold, you know, where you had this digital currency that you could use on the internet, and it wasn't US dollars, it was actual gold in a vault. And I was a customer of eGold like back in like 2005 or 6 or whatever, when I was doing all these Ponzi scams. I was using eGold. So that's how I got introduced to like the value of gold, was trying to be an entrepreneur and googling how do I make money online, and then finding my way to these affiliate things, and then going down the rabbit hole of all these different scams, frankly, like all these things that I thought was, oh, this is new exciting technology. Like I remember one of them was called 12 Daily Pro, and it was like the affiliate marketing industry is growing so big that we're allowing it to, we're democratizing it, we're opening it up to anybody who wants to deposit $1,000, and then we'll show it out to our network of affiliates. You just have to get an eGold account, sign up the eGold, and then you know you put your ad in rotation, and then all the millions of people that are in the 12 Daily Pro advertising network will help each other out, and then you'll generate 12% a day on your investment. And if you you know if you have a business to promote or whatever, this is where the value is. And it's suckered in a lot of people, and the technology narrative of like the internet marketing thing really confused a lot of people. And me as like a 20 something who's like no experience with business, who's coming into this internet thing saying like, oh my god, like this is exciting. It's like you know, this is my way of catching the web 2.0 wave, is like participating in these exciting technologies that allow anybody to participate in the advertising game, when really it was just a Ponzi scheme. And I learned about gold because I was using eGold, and so that was my first retail, I guess, touch on the concept of digital gold, was actually being a customer of eGold for a Ponzi scheme.
So it's like yesterday I had Bram Cohen, I recorded with him, so that'll be up in like a week or two. And he was at Mojo Nation, I think was the last company before he went off and started BitTorrent. And they had like their own version of, I guess, like eGold, some kind of digital money and stuff. And so it's funny, 2 days in a row I'm talking to somebody who was from the earlier internet days where people are trying to figure out, you know, online payment systems and stuff. But one experience that I had with PayPal, which I thought was interesting as you're saying this, I thought you were going to go here. It kind of goes back to censorship resistance for Bitcoin. If you think about, I don't know if you experienced this, but when I was selling a lot of stuff, if you got too many chargebacks, they froze your entire account, all your funds in PayPal. And this happened all the time to people. If you were like an eBay seller or something like that, people get locked out of their funds and you can't take the money out. You're locked in. You're in this process that could take you months before you get cleared. It wasn't like you just pick up the phone and call somebody at PayPal back then. It really sucked, you know? So kind of speaks to this
Yeah,
whole censorship resistance stuff, you know?
100%. Like that was my experience. So after getting scammed quite a bit and realizing that the internet is just a bunch of Ponzi scam cesspools, and I got to be more careful about what I believe when I'm Googling how do I make money online, I started actually learning about becoming an entrepreneur and the advertising industry for real, because I was filling out these surveys and whatever. And then I realized, well, wait a second, somebody's actually selling my information and making $2 or $3 on me filling out the survey or me signing up for this thing. And I kind of went down that rabbit hole and was like, well, how do I do that actually? How do I become a seller of leads instead of me being the product and me being the lead? So I started dabbling around with like the internet paid to reads, paid to affiliate space. And I started getting more into like what you were doing, where you were going to the more legitimate affiliate marketing sites and trying to do your own pay-per-click ads and stuff
Yeah.
like that. And I created a couple of websites where it was like basically paid to read sites and stuff, and I was generating leads. So instead of me trying to go out and push uh you know, like diet pills or whatever, I was just finding other people that wanted to sell diet pills, and I would just sell those leads to network marketing people. And then I realized that, like, you know, after about 6 months or a year or so of dabbling in that, I'm like, I don't like this is not like what I want to be doing. I want to make movies. I don't want to be freaking going down this shady rabbit hole of internet lead sales. So I actually came up with some cool concepts for some games, because it was around the same time that Facebook opened up the API.
Mhm.
And
Oh
I
07.
was a super, yeah, 07, 08 was when I got into the Facebook games. And it was just super exciting because back then it was like anything was going viral on Facebook. It was like people, you bite your friends or whatever, like the zombie games, things like that, just drawing on your friends' walls. And I had a whole bunch of ideas, so I partnered up with a developer and another friend of mine, and we created like 100 different apps on
Wow.
Facebook in the early days, and one of them went viral. So it was like within a couple of months of just nonstop, like reading the developer forums and networking with people, I must have bought like 25 apps from other developers, and like, just totally bootstrapping. Like we're talking like $500,
Yep.
buy the game
Yeah.
for $500. I got one. I got one that I came up with. It was like a fun concept for like a social game, and it went viral. We got like 1 million players in the first couple of months. Got to about 100,000 daily active, or sorry, monthly active players, and
It's
then
pretty good back then.
it was a virtual currency game. It was like we were just allowing people to play, like, opening up food cartons or whatever and earning virtual food tokens. And it was like people started to spend real money on that. And we were making some pretty good money. I went from being dirt broke to making like 100 grand a month with my partners. We were doing like a three-way split after
Yeah.
expenses. It was like life changing for me. And I'm like, okay, well, I'm so glad I quit the network marketing stuff, because I would have been making 10K a month, like working my ass off.
Yeah.
And now I'm making like 25K a month for just like this cool idea I came up with. And now I'm just coming up with fun concepts and learning how to manage a micro economy, or a micro game economy. And we did experience that, where the PayPal accounts got shut off.
Yep.
Every other Facebook game developer had their PayPal accounts shut off. It was
Mhm.
a big problem back then,
Yeah.
because it was a new industry and they didn't know how to handle it. So they were just freezing everybody's money. It was terrible. It
Exactly.
was difficult to run a business with PayPal freezing all your money.
The other day, I don't know if you saw, I posted a video of me and James Hong, the Hot or Not guy. He introduced me years ago to one of his
Yep.
good friends, Max Levchin. He was one of the PayPal founders. And at the time, Max was running a company called slide.com. I don't know if you remember, but they did exactly what you were doing. So I built music video codes, which was before they were called apps. We called them widgets. When you embed something on there, we were calling it a widget, but then later Facebook called
The
them apps.
iframes.
Yeah, it was like an iframe and embedding kind of thing, right? But my thing was one of the more popular things because it was massive in terms of reach, right? And what he did, there was another company called Rock You. I don't know if you remember RockU.com. This guy,
Oh, I
Lance
remember
Dakota.
Rock You. Yeah.
Yep. So Lance had said, he came up with the idea for like glitter text and stuff because he saw music video codes. So he met me at a conference once and he's like, "You're the music video code guy." He's like, "I built my business because of this shit." And I was like, "Wait, what?" And they were massive. I was like, he raised tons of money, overcapitalized actually. But Max created this idea where you put it like up and then you upload the photos to his site and then it slides the photos in. They had all these different iterations of like how to share your photos into your MySpace page. But then what he did, he went out to all these like little app developers, so to speak, that had these like Facebook apps, and he was rolling them all up. He was buying them all. He ended up selling that company to Google for like $180 million. And then later
Max.
Max Levchin. Yeah.
Yeah, that name is very familiar, and I don't think it's from PayPal. I think I might have
Affirm. He's the founder of Affirm.
Okay, I
Yeah.
remember there was a bunch of company. There was like 3 or 4 companies coming in trying to do roll ups in the
He
app
might have
development
reached
space
out
on
to you.
Facebook,
Yeah.
and like it was him, Playfish, Zynga.
Yeah.
I
Zynga,
think,
by the way, Brad, when I started Gamers Media, which became Yashi, my co-founder at my previous company in Bolt, this guy, Aaron, he says, because our company got sued, went bankrupt, as you know, right? And at that time, he's like, I'm trying to do this other thing. And I'm like getting it off the ground. And he goes, "Oh, you're doing the game thing." He goes, "I got a guy to introduce you to, Mark Pincus, Zynga."
oh yeah,
So, and he's like, "Oh, would you want to be a VP of product development?" He's like, "We have one game right now, Texas Hold'em." He's like, "And we're thinking about maybe scaling this into multiple games." And that's what they did. Like they actually bought Farmville, rebranded it as Farmville and stuff from these developers. And a lot of these
yeah.
things
They
are just
they they
acquired.
bought
Yeah.
they bought Yoville from my friend here, like in London, Ontario, and that his company created the whole Ville thing. Like he created Yoville and built all the like asynchronous gameplay infrastructure and everything. And then Zynga bought that from him, and that kickstarted the entire Ville craze, which actually reminds me a lot of like what's happening right now in crypto and play to earn gaming and stuff like that. It's very very similar. It feels a lot like the same excitement. Like people are excited about like Web3 and play to earn gaming and stuff like that. And it's I think it's going to probably end up similar to the way that the Facebook gaming thing ended up,
Yeah.
which was great for a couple of people, like a
Yeah.
couple of companies, but then eventually it just got so saturated,
That's right.
and the
And
margins
you know,
got
it
so
really
small.
worked in the beginning because they didn't have an algorithm. They call it Edgerank, right? The algorithm for how they show stuff in the feed. Initially, it was chronological. Everything that got posted that you followed, you kept seeing it. So everything went massively viral. And every time you played like Friends with Words or any of this kind of stuff, every single update was showing up, and people are like, "What's that?" Click, click, install. Click, click, install. And it was like just massive growth. And then Facebook's like, "Wow, this is too spammy, man. The way these guys are pushing their updates into the feed." So they had to like, throttle it back. But if you were early, you got
Hmm.
like Max was early, Rocky was early. These guys were early, and they got massive audiences for their apps, I guess. But let's move past that. So, tell me how you got introduced to Bitcoin and what So you were early, 2011. Um, First of all, you got to be a
Yeah.
multi-billionaire, right?
Oh yeah, and Satoshi's.
Exactly. What happened? Did you sell early?
So I was into the Facebook gaming thing, and
Yeah.
I was like, I had this experience with eGold, and I was like, okay. So what ended up happening was eGold got shut down, and all my balance pretty much just went to zero, because the FBI, or I forget who it was, ended up shutting down eGold because eGold started to actually become pretty popular,
Yeah.
and it got to the point where there was like, no, we don't want you guys running this anymore, and they of course they would use some contrived thing about how it's for money laundering or black market or whatever they're going to say to shut it down, but it's because it was centralized. And um, I experienced kind of a similar thing with the Facebook game development business because it was pretty wild west at the beginning. It was like the API was open and you could do whatever you want. And then Facebook quickly realized that there's massive growth happening in the game industry, and they're going to have to like come in and like tame it and take their cut like 30, and they kicked off all the independent payment platforms like Super Rewards and Spare Change, and there's these other ones that were like players loved it and they were using it all the time. But Facebook decided, okay, we're going to come in and make this actually part of our strategy for our company's growth rather than just letting the API be open. So they grew off the back of gaming, actually, Facebook, but they didn't really give the gaming companies much respect. Zynga had a bunch of sway for a little while, but then eventually it was just like, that's building on a platform where there can be gatekeepers. You're always at the mercy of the whatever the centralized company is going to change. And so I kind of experienced that, how like, we were doing so great with our revenue and stuff, and then all of a sudden it's just like from one day to the next, it's like 30% of your money's just gone. And the thing that your players love, they can't use it anymore. So I mean, I experienced a little bit of like the centralization versus decentralization from being on the Facebook game platform when it was really decentralized. And I actually experienced hyperinflating my game economy. So I was like the central banker for my game, and I had to manage like how much we would give away to people and how much you would earn for spending money, and like all those different things. Like we would run promos and stuff like that to try to encourage people to play. And I hyperinflated my game economy, man. Like it was like Venezuela. It was like the currency went to like from pretty stable growth to like hyperinflation because somebody found a bug in the code and they exploited it and printed like trillions of tokens for themselves and we didn't find out for like 3 months later. So it was kind of funny. Like I had all these experiences through not like learning about like economics through the traditional way, but actually experiencing trying to run a virtual game and having problems with the economics and inflation and stuff like that, like firsthand. And then when I actually had money in the bank for the first time in my life, I was like, okay, what am I going to do with this now? Because I want to make a movie, but then I got extra money left over. I mean, I'm going to build a house. Got married, had a kid. But then I had all this money in the bank left over. Not all this money, but I had like, 50 grand or something left over in the bank because we're piling the money back into the game company, trying to
Mhm.
grow it. But I had some money in the bank and I never experienced that. So I was starting to read books like how to Rich Dad Poor Dad, like Think and Grow Rich, and like just books about money to try to get like an investor mindset. And I learned about gold, and also followed the Ron Paul campaign for 2008 and 2009. Like really dove down the rabbit hole of central banking and how they're printing tons of money, and how the purchasing power of dollars gets devalued over time, and how gold has always been seen as more of like a store of value asset and safer to keep your money in gold than it is in dollars. So it was kind of like all that stuff around the same time. I was down that rabbit hole of like Austrian economics and sound money. I had been a user of eGold before. I was experienced people paying me thousands of dollars a month for virtual currency that had no intrinsic value at all. Like it was just a centralized token that you couldn't do shit with except for inside of the game. So I just got that people would get digital scarcity and digital value. And when I saw Bitcoin in 2011, it was just everything combined, and I'm like, this is awesome. This is the combination of so many things that like is the perfect libertarian money. It's digitally scarce. You can mine it with your computer. It's like a game in a way, and it's peer-to-peer cash is decentralized. There's nobody in the middle that's going to screw with it like with eGold or like with PayPal or even Facebook. So all those things clicked for me, and I got into Bitcoin mining in 2011. I was buying gold and silver at the time, so I was like, all right, so I don't know what's going to win. I don't know if Bitcoin's going to win, but I don't know if gold is going to go, because people were saying gold is going to $10,000 an ounce, and silver had gone on this parabolic run in 2011 from like $20 to $50 or something. And people were saying it's going to $1,000. So I was like, I don't know what's going to win here. I'm not an investor. I love the idea of Bitcoin. So I'm going to take a third of my money and I'm going to buy gold, a third of my money and buy silver, and a third of my money and buy Bitcoin. And then, just sit on them for a while and see what happens. And obviously I got into Bitcoin at $10. And when I heard about Bitcoin, it was $5. By the time I got my account funded, it was $10. And then within a couple of months, it was up to 30. So I sold half my Bitcoin thinking, oh my God, I'm so smart. Like gold and silver didn't do shit, but like Bitcoin went up 2-3x. I'm so smart. So I sold half my Bitcoin thinking, oh, I'm such a great trader. Probably the worst trade ever of my life. But
what year did you sell that? What year was it?
2000. It was like 2 months after I got into Bitcoin.
Oh, Jesus Christ.
I got in like June of 2011 or something, and then within a couple of months it was just like up to $30. I was like, oh my God, this is crazy. I have to take profits.
Oh my God.
But then it crashed to 2. So over the next
this is a lesson for everybody that's just bought Bitcoin this year
100%.
at like 20 or 30,000 and it went up to 60 and they're like, I should sell. It's like, dude, listen to this.
I regret every time basically that I ever sold Bitcoin. But also at the same time, it's like there's the early pilgrims that fall off the wagon. You know what I mean? Like that, I was definitely one of those people. So I saw it early and I was super excited by it for the philosophical reasons, and not just because it was like a way to make money. It was like a mission for me. It was like exciting to see that the Austrian economics sort of theory of sound money was actually being created in this new invention with digital scarcity and a blockchain. So I was pumped, I was excited, but it's still like, I don't know about money. I mean, I'm an entrepreneur. Like I don't know about how to trade or how to do risk management or anything like that. So yeah, I made a dumb move of selling Bitcoin early. But kept enough that I would definitely be incentivized to stay paying attention to it. If it eventually got to $1,000 was the dream that we had back then. Like one day it'll be $1,000.
Dude, my dad was here the other day. I got him into Bitcoin. He got in late, but he's in, right? Later, I should say. And it went up to like 64 and it crashed down to 30 and it went up to 69 and it crashed down to where it's at now. And this is the most painful conversation to have. He's probably listening to this live right now on YouTube or something. But most painful conversation because he's like telling me how, what I really should have been doing is I should have sold it at 64 and I should have bought it back at 29. And then I could have sold it at 69. And then I could have bought it back at 40 something. And then I go, did you know it was going to do that? Because I didn't know that. The hell are you talking about? Like, just he'd never invested in stock, so he's like, this is like his first, experience of seeing volatility happen in real time. When you hold the asset, you really notice it, right? When you see stuff on TV every day, S&P 500 at 4:00, when the news comes on, 6:00 news, whatever, you're not really paying attention, right? And so, So anyway, I'm listening to this, and I said, here's what I encourage you to do. You're not selling it because he doesn't know how to sell it. So I have it in cold storage. He's not touching it. I go, you're not selling it. You're going to hold it. And I want you to write down when you think the next top will be, and then tell me the date and the price. And then you tell me when it's going to bottom and the date and the price. And you tell me the next 3 times it does whatever it's going to do. It's impossible to know that, right?
And if you're right, I'll give you more Bitcoin.
That's right. Exactly. But it was a painful conversation to have, because people that are new to Bitcoin, they think that they can try to time these things, and you absolutely can. And what I was trying to show them is, like, if you look at a chart last year, if it dropped to 3,000 and whatever, 3,800, right? And then it went all the way up in November to like 20,000, you probably would have sold it, thinking it'll come back to 3,000. And did it come back to 3,000? I don't think so. Will it ever do that again? It's possible. Probably not likely,
Yeah, I mean, I get the perspective of a lot of entrepreneurs and a lot of new entrants to Bitcoin this year, whether they're retail or whether they're high net worth individuals that are just used to the regular markets that are tempted to like trade Bitcoin and to sell Bitcoin and to buy futures to like hedge their volatility and stuff like that. Because I went through that whole journey since 2011. It went down to $2 after I sold. It went down to $2 at the lows, and would have been smart to buy more, obviously, but I was just like, I'm sitting on my stack that I still have. I'm not going to sell that. Like, I already sold. What's the point? And anyway, silver's going to $1,000, so so I don't need to bother trading this Bitcoin stuff. 10 years later, I think gold has gone up 50% since I bought it. Silver's gone down 50% since I bought it, and Bitcoin's up 500,000% or something crazy since I bought it. So, the silver thing is funny, and that's why I always laugh when people say, it's not Litecoin that's silver to Bitcoin's gold. It's Ethereum that's silver to Bitcoin's gold. Like, all right, great. People buying it now are going to be paying and suffering for the next 10 years because silver went from like $60 to $30 in 10 years. So yeah, sure. Ethereum is silver to Bitcoin's gold.
I have a friend that's previously had an ad tech company, just like I did, and he sold it, and then he actually bought it back. He sold the company and he bought it back from the buyer. That happens a lot in tech, And by the way, I like your coffee mug. That's cool. And
Merry Christmas, live viewers.
But he was telling me he's into silver, and he was in one of the clubhouse rooms. I don't know if you remember this, but I brought one of my friends up, and it was this guy Josh, and he was arguing with everybody his points. He's a contrarian kind of person, and he is swearing by silver. He's one of these silver guys, and he tells me. I said, well, the bullish case for Bitcoin, I had VJ on last week. I said, he watched the episode. Dude, he sent me a string of text messages. I had to call him. I was like, Jesus, we don't talk on the phone very often, but I was like, I got to call you. Like, it was like 30 text messages in a row. They're paragraphs each. And he doesn't want to own Bitcoin. He thinks that everything's overinflated. The stock market's overinflated. And he doesn't agree with all of us where we all say that Bitcoin, at least I say, Bitcoin is I wouldn't say it's a hedge to inflation, but I do think that the Fed is inducing the assets to push up, and he disagrees with this. Why do you think that asset prices are at all-time highs across the board everywhere? What is your opinion on that?
Well, I definitely agree with that one. I like over the last 10 years, I mean, I've learned a lot about markets, and I've tried to study history quite a bit because I made lots of mistakes in investing, like selling half my Bitcoin early. Then, I had, in 2013, when the markets were going up like crazy again, I was like, I guess I'm a good trader because I called Bitcoin early. So I'm going to put some Bitcoin on Mt. Gox and trade the swings and try to make more Bitcoin. And like, obviously we know what happened with Mt. Gox. So I learned not your keys, not your coins.
Yeah, that didn't work.
Don't trust, verify, like both of those things. Roger Ver was publicly out there as a Bitcoin insider saying like, I've seen the keys, everything is fine. Don't worry, don't take your coins off the exchange. And obviously, don't trust, verify is an important thing to learn. It's not just a platitude in Bitcoin culture. So yeah, lots of us lost money on exchange hacks and trusting centralized third parties. Counterparty risk is real. And that's why, like, every year, January 3rd, we have this proof of keys thing in Bitcoin that Trace Mayer started, which encourages people to just take your coins off the exchange into your own custody. And I definitely agree with that, because I just got a text from a buddy today, actually. He's an entrepreneur friend of mine, and he's like, my trainer, my personal trainer, has got $110,000 stuck on this wallet. He calls it a wallet, Eurify or something weird. And he's like, they're telling me I can't withdraw my coins now, and I have to pay $10,000 to, because there's some kind of they suspect money laundering, so they have to do a FinCEN investigation or something. I'm like, dude, man, your buddy just got scammed. Like, this is why don't trust, verify, and proof of keys matters. Like, people got to take their coins into their own custody. If they really do understand Bitcoin, they'll try every effort they can to, like, own their own keys.
So you're also an investor in Bitcoin companies, right? Which is something I'm
Wait, I don't think I
new
answered
to.
your question, did I?
Not really. It's all good.
I got off on a tangent. Sorry.
It's okay.
But I agree with you. I 100% agree with you.
That the Fed is inducing this.
The Fed is doing it. The Fed is doing it. The central banks are doing it. And Ray Dalio wrote a really good piece at the end of 2019, early 2020 on his LinkedIn, talking about what was going to happen. And it's been playing out like clockwork. He basically said that the Federal Reserve is in a tight spot. The only thing they can do is raise taxes, lower interest rates, or stop printing money. And we know they're not going to stop printing money because it's going to crash the markets. Yeah. We know they're not going to raise interest rates because that's going to cause a worldwide depression. That's going to cause, like, the middle class to lose their homes. So the only thing they can do is keep printing money, and they're not going to raise taxes because taxes are already too high, and it's unsustainable. They don't have the political capital to raise the taxes. So the only thing they can do is keep printing money. And in an environment where they keep printing money, it's going to drive the cost of everything up. And then it's going to cause class warfare between the poor and the rich.
And that's what's happening.
And the rich, then the only thing they're going to have to do is, like, raise the taxes on the rich. The rich are going to want to leave the country, and then they're going to be trapped by the politicians who want to prevent them from leaving. So, I mean, it's been playing out pretty much exactly the way Ray put it in that prediction right before the COVID crash.
Yeah.
And I think it's 100% accurate. Like, the Federal Reserve and the central banks are just driving prices up. Like, it's pretty obvious, you know, like, rich people are getting the benefit from the rise in the stock market and the rise in real estate, while the poor people are just suffering through inflation while not getting the benefit of, like,
and it's like, and my body believes that he doesn't believe that like, let's say, you know, the Fed is now tightening, right? So they're QT, so to speak, right? They're gonna stop buying the bonds. They're gonna be done by, what is it, March now, I think, on the buybacks of the bonds. And so I said, well, the next thing is they're gonna start raising the rates. They said early Q1, it looks like maybe Q2 of next year. I said, and what do you think happens from there? I go, what's going to happen is you're going to see a response from the market. The market's going to crash. And then what's going to happen from there? They're going to have to go back to easing again. Right. And he's like, no, I don't think so. And I'm like, I don't think you really understand what's going on with the debt to GDP ratio. Like, you really have to take a really deep dive and look at this. Like, I talked to Greg Foss about this. He's like, they cannot do this, as he calls it. It's grade 11 math, Jay. Right. So, at some point they'll have to capitulate on, like they did in 2018, like they did in 2020.
Why does he think, what was his reasoning to think that they wouldn't do it?
What he thinks is that the markets, he says, this is his exact words. He's like, the Fed doesn't care about the stock market prices or the averages on the S&P and the Dow. And I said, I agree with you. They don't care. What they care about is employment. And if you look at what's happening when the stock prices drop, who are the people that make the decisions on who they lay off? It's all the executives and the board members, and their stock compensation is how they get compensated, through stock options, right? So if I'm looking at my stock declining, how do I fix that? So two things, right? You have interest rates that are going to rise, cost of capital goes up, profitability goes down, all things remaining equal on the multiple of the earnings. That's a problem, right? So what do they do to try to fix that? They can lower their cost by laying people off. That's a domino effect in the economy. That's exactly what the Fed wants to prevent. So they know the way the system is designed, the executives in these public companies, they have compensation is based on stock performance, right? Which is it's essentially, they're going to be incentivized to lay people off if they have if they have a rise in cost, which are both, it's a double whammy happening, right? You have the Biden administration that wants to roll back tax cuts, and then you have the Fed that wants to increase interest rates. Both of those things will impact the bottom line for these public companies. And what are they going to do? They're going to lay people off if that starts to happen. And that will be a contraction in the economy, and there'll be contraction in employment, and the Fed will have to respond to that. And how will they do that? They'll try to create their profitability by lowering the interest rates once again.
Well, I mean, there's some other things that they could do. There's a lot of tools left in the tool belt for the central bankers before we get to global depression status. I think that we could do, like, we could see crazy things, even like the central banks directly buying stocks. Shorting gets banned. The stock market can turn off for a little bit. They could do something wild, like everybody that's like, because the wealth gap is getting pretty big right now, and it's mostly because of money printing and low interest rates and easy credit for people who are credit worthy, like the VCs and corporations and stuff are getting tons of credit, which is money printing basically. And they're like, the wealth gap is increasing because the cost of scarce assets, or scarce-ish assets, like homes, stocks, whatever, like that's going up because of all these policies. And the poor people are just kind of left holding the bag on this. But now, like, homes are becoming less and less affordable for people to be able to become first-time home buyers or upgrade their lifestyles or whatever. But they could even do something crazy, like take the money printer, and instead of giving it to banks and corporations, they could just say, okay, everybody that doesn't own a home, we're going to subsidize your home purchase. And you don't have to pay for 2 years. Or everybody's credit card limit is now 5x what it was, and there's no interest payments for 2 years. To just spur like all kinds of spending into the economy. I mean, this is kind of
it's all
crazy.
money printer though. Yeah,
it's off the cuff. Like, I don't think this is. I just mean, like, before we get to the depression levels, I think there's a bunch of things they can do first, including screwing around with interest rates and directly buying securities and stocks. But it's all inflation. It's all going towards increasing the money supply, and that's all going to be good for Bitcoin in the end. The only thing that I think would be negative for Bitcoin is the like, if there's a reason why they actually want to cause a global depression.
Yep. Raise interest rates like, dramatically. Yeah.
Yeah. If they want to crash the markets for some political reason,
yeah,
or if there's a war or something like that, or a great opportunity to grab more control, and while people are really compliant, if there was ever some reason why a bunch of people were compliant for unconstitutional mandates or something like that, I don't know if that would ever happen, but if there was ever a time when people were really very compliant, they may have a reason to grab more control by trying to crash the markets by raising interest rates and stopping the money printer. And, that would be bad for Bitcoin in the short term. I think in the long term, Bitcoin doesn't suffer. It would suck for volatility in the short term. And, that would be maybe like sub 20K or something. I could see that happening if things got wild. But long term, man, I think people come to their senses and they realize, like, Bitcoin is the only asset that makes sense, whether it's in a world of UBI and quantitative easing, or if it's in a world of Great Depression 2.0, people are going to want sound money, and the scarce, unless the internet is off, I think Bitcoin wins.
Well, yeah, and that's never happening, but because the government's running on the internet now, the military, everything. But if I will say, I was talking to VJ about this. I said that he, in his book, the bullish case for Bitcoin, he actually gives the risks. He lists out the risks to Bitcoin, right? Protocol, et cetera. The only thing that I think is a legitimate risk is what you're talking about. It's the Federal Reserve. It's the only real risk. And again, it's probably more short-term than anything, but I can definitely see a world, highly unlikely, but I can see a world where they either make a policy error in some way, or they intentionally decide they want to crash assets because it's gotten out of control. But that's going to create food lines, massive Great Depression, worse than ever. And it's the only way. I think it's highly unlikely as a result, because I don't know anybody has the fortitude to want to actually do something like that. But if they actually did do that, the only risk to really Bitcoin, in my opinion, is, like, I always say that, like, if you look at the wealth, right? And I don't have it in front of me, but if you look at the charts on wealth, who's holding the money? institutional and high net worths, which are like the ultra high net worths and the billionaires as well, right? There's only like 30,000 ultra high net worths in the world, right? It's not a lot of people out of 7.8 billion people, right? So when you crash the assets, you're not really hurting that many people, but you are hurting the economy because those people control all the employment and everything else, right? Yeah. Those institutions of people. So I do see a possibility, outside chance, right, where they decide we want to increase interest rates, and then that wealth will decide I don't need to be in the assets anymore. So they start to liquidate very rapidly to move into what beats the hurdle rate on inflation, which would be now the yields on these bonds. But if Greg was in here, he'd be screaming and yelling at me right now saying that's not fucking possible. Do you know how to do any math? It's like the whole thing would break, and it's like, yes. And I don't see them being able to do it, but it would be the one thing that would crash it, because you would have an alternative as Bitcoin Tina. There is an alternative. In this case, there would be an alternative. And that's the only reason why Bitcoin, in my opinion, they created Bitcoin. They didn't physically create it, but they created the need for Bitcoin, and they'd have to erase the need. And the only way to do that, as I think, is to give us an alternative for our capital and a risk-free instrument. It doesn't exist anymore, right? Bitcoin is a savings account.
Yeah, you'd have to go back to sound money at the base layer of money, and that I don't think they're too addicted to the tools. I don't think that's ever going to happen with
I
fiat
agree.
money.
Yeah, totally. I want to go back into your story, Brad. So you're a Bitcoin investor, right? So I more recently started to invest in Bitcoin companies. I've been investing in tech companies in the startup community for a decade, but really not in the Bitcoin space, but you have. So I'd love to just, maybe you can highlight some of the companies in the Bitcoin, and you've done some crypto stuff too. So I'm just curious what you did and how what those companies are, and like, just give us a little background on that.
Sure, yeah. So in 2017, during the first bubble of crypto, the ICO bubble, I was working at Alphabet, which is not Alphabet, but Alphabet, which is a crypto fund. And I mean, I was on the investment committee, and I was on the ICO committee there, and I was watching the whole thing, front row seats, going to the conferences, meeting with the founders, like looking at like the pitch decks and the white papers or whatever, and like it was all run on FOMOnomics, and that's just like, how much can I get at what valuation and who else is in it. It was like, that's all that mattered with the 2000 ICO bubble. Like, what's the cap, who else is in, and like, are you going to do market making, is it going to be on an exchange? Those were like the sub questions. And that
feels like what I'm seeing today.
Oh yeah, like we invested it in like 70 different companies, and I was part of the decision making process for a bunch of them. So I had like a front row seat to the whole crypto bubble in 2017. I had invested in different cryptocurrencies as well throughout my Bitcoiner career, and I mean, back in like 2014, I think was the first ICO with Mastercoin and Counterparty. And I mean, back in the day, there was a lot less of a community split between like Bitcoin versus shitcoins or crypto or whatever. Back in the day, it was like, yeah, there were some people being like, that's a shitcoin or something like that. Like, I don't want to focus on that. I care more about Bitcoin. But everybody was kind of building on Bitcoin or just experimenting with things. Like Litecoin was kind of an experiment. Ripple, even, I remember back in the early days, like Ripple, like the Ripple guys were all Bitcoiners. They were all part of the Bitcoin community. And it was just like not as like argumentative, it just wasn't as warring as it is right now, because everybody like knew Bitcoin was the thing, and like we should all be focusing on Bitcoin. Everybody wanted Bitcoin to win, even Ripple and like the altcoin founders and stuff. They were just trying to figure out other ways to print money, but like they were all aligned with Bitcoin. And then like the 2017 fork war happened at the same time as the 2017 ICO bubble. And so you had this culture of, it wasn't all about Bitcoin anymore. And it was actually, some of it was about like tearing down Bitcoin and trying to stop Bitcoin. And a lot of us like that were investing in crypto and trading crypto and stuff like that, a lot of us Bitcoiners that were doing that kind of got a little bit more hardened and became Bitcoin maximalists or toxic Bitcoiners or whatever you want to say, because we saw like VCs turn against Bitcoin in a way, and like trying to prop up Bitcoin Cash narratives and trying to like fight Bitcoin and the SegWit 2x war and all that stuff, where they're trying to like centralize Bitcoin, take control over Bitcoin. The big companies funded by the big VCs turned against Bitcoin, and like that made a bunch of people pissed off. And then you got like the founder of Ethereum out there congratulating Roger Ver for like his pump and dump scheme when he got Bitcoin Cash put on the Korean exchange and pumped it to $4,000, and they were like trying to coordinate hash power attacks with the Chinese miners against the Bitcoin network. You know, the VCs were just like, didn't give a shit. They were just sitting there being like, oh well, somebody's going to win, and you know, we'll just pick the winner whenever we figure out who it is. So it created a culture of like us versus them, way more than it was in the early days. So like my views have evolved a lot in the last few years, especially like with when you put it in context of the mission of Bitcoin and why Bitcoin's important for the world, and rather than just like the money side of things. So if you're just thinking about it as a trader's perspective, and this is what I think is the main sticking point between crypto versus Bitcoin, most of the people in Bitcoin are like financial activists. They're here for the mission of sound money. They're very into human rights. They're trying to help see a peer-to-peer cash that's decentralized get deployed to the world through the Lightning Network, that can let anybody be part of the Bitcoin network and benefit from having sound money. And you know, cheap transactions is very important to us, while at the same time retaining decentralization through the threat of anybody being able to run their own node and then like refuse to allow changes to go through on the Bitcoin network that are against consensus. And that is like the culture of Bitcoin. It's like anti-authoritarian decentralization above all else, pushing forward the mission, the original mission of Bitcoin, which was sound money and peer-to-peer cash, but in the most decentralized way. And like, you know, that is like, you get a lot of people in Bitcoin that are very passionate about sound money. And they're very passionate about financial activism and all the good that Bitcoin can do in the world. And then on the crypto side, you get a lot of people who are like venture capitalist minded, entrepreneurial focused, like, oh, this is a new technology. I can just come in here and jump in and like code some smart contract thing. And I guess I can launch a token because Web3 and NFTs. You know, you get a lot of people who are just more entrepreneurial minded, like I said, and traders, people that are just like, this is another market I can trade. I have an edge here because I understand meme culture. I understand cryptocurrency. Like, it's more natural to me than stocks and futures of sugar and all this crap from the 1900s. Like, this is the future. I'm a digital native. I get it. So it's like two totally kind of like conflicting narratives. And then you get a whole bunch of misunderstanding between Bitcoiners that think all shit, like there's like a sect of Bitcoiners that are against everything that's not Bitcoin.
Chairs.
You know, chairs. But like, you know, it's a very small group of people that are literally like, they take the toxic Bitcoin maximalist meme and they misunderstand it. I don't know if they're just left curvers or whatever, but they believe that like the toxic part is the important part, and they actually strive to be toxic. And that's never been the point of toxic Bitcoin maximalism. Was an ironic, self-deprecating, like making fun of the meme that the shitcoiners and stuff would try to throw at Bitcoiners, saying, "Oh, you're too toxic." So then we would just adopt it as like, okay, I guess I'm a toxic Bitcoin maxi. But then the class of 2021 comes in and they're like, oh, I guess I'm supposed to be a toxic person, so I'm gonna start making fun of people and being an idiot on Twitter. But that's such a small group of people. I feel like it's just as bad for the crypto people to straw man Bitcoiners as if they're toxic maxis and use the narratives that this tiny sect of Bitcoiners use, and say this: all Bitcoiners think you can't spend your Bitcoin. All Bitcoiners think everything else is a shitcoin. All Bitcoiners think Ethereum is a scam. Like, there's a lot of nuance in it. And I find it's just as bad for the actual Bitcoiners who believe those things to go out and be like toxic to people. It's just as bad for the crypto people to be going and straw manning Bitcoiners all the time. And it happens both sides. And what you end up with is a lot of Bitcoiners misunderstanding what's happening in the crypto space and like assuming the worst about the incentives of the people that are over there on the crypto side. And And then you get a lot of crypto people totally throwing out the Lightning Network, not understanding what's happening with global adoption of Bitcoin, thinking Bitcoin's too slow and too expensive, and utility value is where the value is derived from rather than the monetary properties, and like totally misunderstanding why Bitcoin's valuable in the first place, and then thinking, oh, I guess it's network effects like community and developers that matter, and or stock to flow ratio or whatever. Like people, it's just like total misunderstanding of where the value is. And so like the way I think about Bitcoin and also in crypto is like, I pay attention to what's happening on the crypto side because I think there is some interesting technology being built over there. And I think that some of that may come back to Bitcoin, but the money tokens, like all the pre-mined coins and all that stuff, it's totally antithetical to the mission of why I got into Bitcoin in the first place. So the trader mindset of me and the investor mindset of me is like, oh, well, it would make a lot of sense to invest in the Solana round at 5 cents if you know this big fund and this big exchange is going to pump it to $100. You get a lot more Bitcoin that way. But then also I'm like, at the same time, I'm like, but that does nothing to move forward the mission of sound money. That's just propagating more shitcoin narratives. And, you know, you'll never catch me promoting shitcoins. Like I will dabble with like investing in some of it silently,
Sure.
you know, but the only thing I will ever talk about is Bitcoin and the mission of Bitcoin. And I decided that what I was going to do was, take any profits that I make from investing in the altcoin stuff or in the crypto stuff and
give it
use
to
it
my
to
kids.
just fund, give it to you. And yeah, you can do what you want with it.
Give it to my kids.
You know, invest it in Bitcoin companies.
That makes sense.
So like, that's what I've been doing the last couple of years. I've been trying to pay my Bitcoin tithing. You know, that's what I call it. It's like I
gotta show you something. Check this out. I'm gonna share a screen here.
Okay, let's see it.
Check this out. I put this up. Mark Cuban writes, you can buy all the Dallas Mavericks merch you want with Litecoin. Just pick Litecoin when you check out. Tell your friends. And I edited this and I put sponsored here and I posted and I highlighted it, right? And Cuban writes, how fucked up do you have to be to doctor a tweet to try to out Maxi everyone?
Oh my God. He's ridiculous.
It's so funny. And it was like, look, at the end of the day, where are we at? There you go. At the end of the day, it's like, this is the point that you're making. Like everybody just views everybody to be a maxi. If you say something that it's like, yeah. Why is he promoting Doge and Litecoin and all this bullshit? It just like, there's no reason to promote it. Like you just said, it may mess around with these things, but why are you promoting it? And he's got to be smart enough to know that it's not sound money, right? Like it just doesn't make
I don't think
sense.
He is, honestly. I think
really?
Mark Cuban's, I think he's pretty dumb when it comes to sound money and understanding
smart
cryptocurrency.
Yeah.
He's a smart guy in some areas, but this is why I feel for and I empathize with a lot of entrepreneurs and investors that come into this space. They totally don't understand where the value is derived from, and they don't understand why decentralization matters and why the ability to run nodes matters. Because you can, if your cryptocurrency is not government resistant, it's not going to survive a government crackdown. And this is where your friend that is into silver is probably where the only thing I may agree with him in is like the government's not just going to sit by, the banks aren't just going to sit by and allow these like token boys from Silicon Valley to come and disrupt the banking system. And like the central banks are not just going to roll over and hand the keys to the money printer to the Silicon Valley VCs because I guess this is innovation. So we're just going to give up our control of the money supply. They're going to try to do whatever they possibly can to stop
100%.
it. They're going to either stop it through bans or they're going to regulate it and force them to comply with the same rules that the banks do and that the traditional finance companies do. And, you know, if your government is against disruption of themselves, which every government is, they're most likely going to try to stop it in some way, or they're going to try to strangle it, or they're going to try to co-opt it. And if your coin has a marketing team, or it has a founder, or it has a VC like backing it, it's not government resistant. It's not even resistant to like the strong man.
Bro, listen, I got to tell you this. I had Bram Cohen on yesterday. That'll be in a week, right? So Bram, founder of BitTorrent, right? A lot of respect, hat off to him. That's unfucking believable. Real OG, right? So he has Chia, right? As you know, right? Mm-hmm. I know you know. So
yeah, Chia. So Chia is one of the ones that I had invested in the 2018 like sort of early days thing. So I've been following the Chia story because it's got a lot of ESG
Hmm.
FOMO, because there's this
Yeah,
whole
that's all
narrative
he
out there
talked
that
about the whole thing. Yeah.
Bitcoin's bad for the environment. So at least I'll be able to capitalize on sucking money out of that scam, and then that affinity marketing scam,
But
and
he's a
then
smart guy. Like
invest in Bitcoin
this is my
companies.
thing. Like he's a smart guy, just like Mark is a smart
I'm not
guy,
saying
right?
Chia is a scam. I'm saying appealing to the ESG crowd. I feel
Yes,
like that's a scam, because if
it's
you
bullshit.
understand Bitcoin's proof of work and
Yeah.
how it's good for the future adoption of clean energy, you wouldn't be pushing that stuff. So, anyways, I'd
But
be
let me
happy to
read this.
take liquidity
Let me read
and
this
put
to
it
you.
towards
So I
Bitcoin.
said to him yesterday, right? Because he's running a company that is basically running Chia, right? Satoshi Nakamoto once wrote an email to Hal Finney, and he said, governments are good at cutting off the head of centrally controlled networks like Napster, but pure peer-to-peer networks like Tor, as an example, seem to be holding their own. And these are Satoshi's words, for crying out loud. You know, it's like, and you're building a business that has a centrally located company with a figurehead himself. Like, to your point, they could just cut the head off, right? Like they're not going to allow, they're going to sit back and be like, oh, it's a great technology, great innovation. Yeah, you won. I don't think so.
I mean, like the common misconception or like understanding of what Bitcoiners are saying around this is, oh, well, you think that the government's going to come in and ban it, therefore you hope government's going to come and ban it, therefore you believe in authoritarianism, and you're not true to your values. And like that's a real warped way to kind of put that and frame that. And it happens constantly. Like 90% of the time, it's crypto investors or fund managers or Silicon Valley VC influencers or whatever. They say these things and they're like, oh, Bitcoiners are just like praying for the government to come down and clamp down on this. It's just like, man, that's so lazy. That logic is so lazy.
Yeah.
Why do you think Satoshi left in the first place? Why do you think the Bitcoiners fought the 2017 fork war? We realized that this thing needs to be government resistant. If it can't be resistant to like Ethereum, the Ethereum monetary policy changes every 6 months or so. They diffuse the difficulty bomb. They change the gas limit. They're going to switch to proof of stake. They added EIP 1559 to make it so that the stock to flow ratio was better than Bitcoin, so that they could appeal to the institutional meme investors that think stock to flow ratio is what makes Bitcoin valuable. Like they keep interfering with the monetary policy of Ethereum. So what does that signal to the government if the government turns against cryptocurrency? It signals that you just have to go to the Ethereum Foundation or Joe Lubin or Vitalik, and you can apply pressure there, and you'll be able to get them to change the monetary policy or fork out protocols. That's another thing that people don't understand with this DeFi narrative. It's like, oh, well, the websites could be shut down, but the protocol can't be shut down. And that's false as well, because if the government really did want to come in and enforce KYC, AML, anti-terrorist financing regulations, which they've been signaling they're going to do, and a lot of them have been already starting to comply with that stuff because they don't want to get gulag, then the government, if they turn against it, and what's Vitalik going to say? Nah, we don't want to agree. We don't agree with that. We're not going to comply with that. I mean, I'm being a bit facetious here, but like it's basically good, like they have the ability to change it. They've changed it just a couple of months ago. Like they
Exactly.
keep changing it over
Yeah.
and over and over. So the government like will be able to, if it gets
Yeah.
that bad, they will be able to put pressure on those centralized parties. So the propagation of this meme that Ethereum is sound money, it's ultra sound money, all this nonsense, it's just so frustrating for somebody like me who's like a Bitcoin maximalist that also like enjoys digging into the technology behind this other stuff and kind of enjoys the meme culture of some of the crypto guys. Like it's seeing them push these false narratives. It feels like a propaganda attack on Bitcoin because it's not sound money. And if they weren't trying to compete with Bitcoin with the sound money thing, and they weren't trying to missell what altcoins are, then I think it would be a lot less contentious between Bitcoin and crypto. But you got A16Z out there, like Tim Ferriss, all these really well-respected people like Kevin Rose and stuff,
Naval.
and Naval Ravikant, the founder of Reddit, all these guys that are super well-respected in the space of like entrepreneurship and move fast, break things, and lean startup and all that. They're all out there pushing these DeFi Ponzi narratives, and like talking about how NFTs and Ethereum is the next best thing, and amplifying it above Bitcoin. So
before we get into that, I want to talk about the NFTs because that was hot this year, obviously. I think that's probably the reason why Ethereum's done so well. Again, I had Bram on yesterday, right? So I talked to Hodl the day before. I was like, give me a good question for Bram. I would love to have a good question for you. You know the space better than me, been in it deeper than me for longer. And Hodl says to me, he's like, you got to ask him who he thinks Satoshi Nakamoto is. Because it's my understanding, Hodl says, is that Len Sassaman was his roommate and best friend. And Len was close with Hal Finney. They're like so early into this. In fact, there's actual quotes from Satoshi himself referencing BitTorrent. He says, for transferable proof of work tokens to have value, they must have monetary value. And to have monetary value, they must be transferred within a very large network. For example, a file trading network akin to BitTorrent, right? I asked Bram about this. I said, do you think that your buddy, unfortunately he passed away, as we know, right? And another point that was actually interesting to do the research is Len passes away, and 2 months later, we hear the last message from Satoshi Nakamoto that he's going away and he won't be back. And then 2 months later, Len Sassaman passes away. I was like, do you think this was your friend? And wait till you see the podcast. He goes, he just stares at the screen and he's like, I was like, bro, that says everything. It's either yes or no. You know the guy. And he's like, it's possible. I was like, holy shit. Like, what do you think, Brad? Do you think that's a possibility?
I looked into that actually like February or something earlier this year when that was kind of circulating. Mm-hmm. And I kind of went back and read some of his Twitter and some of his blogs mm-hmm. and stuff. And unless Len was actually like a very, very good at like Jekyll and Hyde or whatever, mm-hmm. like compartmentalizing his Satoshi personality with his real personality. I just don't think that what he speaks about on his public Twitter and stuff would actually be similar philosophically as what Satoshi would say.
He actually spoke to this. He said Len was notorious for creating these pseudonyms over the internet and then killing them off, almost like suicide, right? Like just shooting them off, right? And he would have them for a while, and they'd be different types of character personality types that were anonymous and stuff. He actually encouraged Bram to launch BitTorrent back in the day in 2001. He's like, I think you should do this under an alias. I don't think you should do it publicly. And he didn't listen to him. He did it publicly. So I don't know, man. There's something there possibly, but we'll never know, right? Obviously, but I thought it was interesting.
Yeah, like Len was definitely working on similar concepts and like definitely could fit the bill for a Satoshi candidate or to be inspired Satoshi or something like that. But he talked. Well,
there's no question that they inspired him. Like Satoshi said multiple times, like the name Bitcoin comes from BitTorrent actually because of the decentralization for peer-to-peer. So they're right there at the precipice of this, right? That's what's really interesting. And I think Len was in all like the cyberpunk kind of mailing lists for remailers and all this kind of stuff.
Len was really into like anonymity, like strong anonymity was his, like what he wanted to see, but he was also into reversibility. So that is where I don't think why I don't think that Len would have been Satoshi, because he was like not as he would be more like, I want to rescue, he'd be more like the creator of Ethereum, you know what I mean? Where if there's a hack, then you'd rescue people. And like Bitcoin is finality, so it's immutable. And that's where I think that's the only reason why I think Len might not have been Satoshi, is because of his comments about like reversing hacks and freezing money for bad actors and stuff like that. Like it's kind of antithetical to what the mission of Bitcoin is. But yeah, it's super interesting that like Bram was into all this stuff.
He was there
very early.
Yeah. And what's weird is this didn't jive with me. I was like, so when did you first learn about Bitcoin? And he's like, 2013. I'm like, I'm not so sure I believe that. Like you're like at the beginning, your best friend is involved with these guys, Hal and all them, like that, what? And then I asked him, did you ever buy Bitcoin? And he said, no. I said, no, I didn't say that. I said, when did you buy Bitcoin and did you ever sell it? And he says, I never bought it. I was like, really? And then after the interview, I hung up on him and I was like, wait a second, I didn't ask him if he owned it. Did you
Yeah,
mine
when
it?
did you buy it? Yeah, you may have gotten some Bitcoin, or
Yeah.
maybe he was the Mount Gox hacker. So he hacked 200,000 Bitcoin.
Exactly.
Just kidding.
You know, maybe you never know. So let's get into NFTs, right? NFTs are hot this year. A lot of our friends made a ton of money in NFTs. I did not, but I wish I did. But you know, it's the hot thing. It's all the rage this year. Tell me what your thoughts are on because I got to tell you, like in Clubhouse, we were both on there. I was talking about Chill Frogs and then Rare Pepes, and Jason Williams is the one that kind of pushed the narrative for Rare Pepes, and it exploded. Talk about influence. I mean, this guy's got tremendous influence in the space. Whatever the fuck he talks about, everybody seems to be doing. What are your thoughts on the whole NFT space? And again, once these Bitcoin maximalists, they were like all over us when we were talking about the Chill Frogs. You were jumping in the rooms. It was me, Jason, and John Gilardi talking about these things. And I was just curious because I've never messed around with this kind of stuff. I wasn't around for the ICO boom. I had bought Bitcoin as a trade. I viewed it as like a stock almost. What a fucking moron, but that's how I thought of it. But then like by you know, as the time went on, started to learn more about it, and then really got orange pilled on Clubhouse with you guys. I got to say, like you and Hodl and Tina and Jimmy Song, and I mean the way you were thinking about Bitcoin and expressing those thoughts and able to articulate it in the way you all do. And I think, by the way, Michael Saylor has been phenomenal for Bitcoin for people that actually have money that would listen to somebody like him, because that's really what the number go up is going to be. It's not going to be from the plebs. It's going to be from billionaires coming into the space, right? That's really going to push the price. You know, the guys on Clubhouse, we like split. It was literally like, it was everybody was loving each other. We're in the cafe Bitcoin rooms and the digital gold rooms and the black Bitcoin billionaires, and we're all like swapping. And all of a sudden, it was like, "Fuck you guys! You're talking about Chill Frogs." It was like, holy cow, man! I just couldn't believe how toxic everybody just like that. They flipped on us. Even you came into rooms. You're like, "Why are you guys talking about this stuff?" You were just
Yeah,
like,
I was away for that month. I was gone to Nova Scotia. I went back home for like a month or 2 months.
Hodl was away too. Yeah.
And I came back, and like I had shitty internet on the east coast of Nova Scotia by the ocean there in a small fishing village that I was in. And I tried to come on Clubhouse a couple of times, but the internet was just so terrible. It was just such a bad experience. I just didn't have any time to get on Clubhouse. I had no internet for, you know, no Wi-Fi for the first few weeks for a month. And then, you know, I came back in, and everybody's talking about these freaking Ponzi frogs. I'm like, what is going on? Like, why are all the Bitcoiners shilling Ethereum NFTs? Like, what happened here? Like, I can get behind talking about Rare Pepes, because Rare Pepes,
nobody was
like
talking
OG,
about that. Yeah.
Yeah, and they were talking about the Chill Frogs. I'm like, oh, guys, like, this is nothing to do with Bitcoin. This is the same as shilling an ICO. It's the same stupid clip art, that nonsense cash grab that you see in the ICO bubble and all over the NFT space.
Yeah.
And it's just a money grab. And it was like 10,000 clip art things with, like, you know, a different mustache or a different hat, or just, it's just bullshit. Like, when I look at that, I just see that's so lazy and stupid, and like, it's like a money grab Ponzi scam. That's no difference than when I was Googling how to make money online, and I go like, fill out a survey and make $50. It's the same energy to me. It's like the same as like a network marketing thing.
It's like trading stocks.
So,
I used to, you know what I used to say? It reminds me of like, it's like a penny stock thing. That's exactly right. Yeah.
And it's like, you know, the people that got in early are going to make a shitload of money by creating the narrative and all. That's all of crypto for the coins, you know, the investments. And it's so that's my initial reaction as a Bitcoiner, because, like, you know, when you go back to what I was saying earlier about the main dichotomy here between crypto and Bitcoiners, there's the financial activism, the mission of trying to promote sound money, the importance of Bitcoin as like one of the best inventions that humans have ever come up with, and how it can increase like sovereignty and freedom and export protection against inflation by the money printers to the world and to the billions of people that live under oppressive capital controls or financial oppression or whatever. Like, that mission's important. And for us to be talking about, like, oh, buy my 10,000 mint frog NFT.
Yeah, but
Ethereum.
Dude, some of those frogs had pit vipers on.
Well, exactly, yeah. So I guess I didn't understand that when I came.
Come on now.
Like, why are you guys?
That's scarce.
So, like, you know, the NFT thing is a nuanced take, because the concept of digital art and digital collectibles and digital game assets, that's not going away. That is going to be here forever. There there's like an entire massive industry outside of crypto that has to do with like digital game assets and digital collectibles, and it's a multi-billion dollar, if not
Mhm.
bigger, industry before crypto. And it was a lot of like gamers buying skins and buying and selling skins and investing in digital art stuff. But you're talking about the way that I was looking at it before the bubble really took off was there's definitely going to be some long-term cultural relevance here, and NFTs as a concept is not going away. So Bitcoiners should be working on building this on Bitcoin and on Bitcoin layers. And it's a crazy idea to think that digital ownership is just not ever gonna propagate. Like
Mhm.
once that idea is out there, it's gonna infect everything, and you're gonna want to own your digital items in the same sort of way that you own your Bitcoin. So that idea was actually started on Bitcoin in
Yeah.
like 2014 or 15 or ever with Counterparty. And one of the first big use cases for that was like the idea of like the digital rare Pepe collections, which is like artists would just make these cards that were kind of like ironic and making fun of different things, and they were just like the Pepe frog in these different series. So people would make artwork, and then there was the scientists that would they were like a centralized body basically that would like authenticate whether or not it was a real Pepe or a fake Pepe or whatever. And that was kind of interesting, and people were excited about that back in the day. But then Bitcoiners realized that in order to scale Bitcoin to the world for the important use case of store of value and peer-to-peer cash, we have to be good stewards of the blockchain, and we can't just be putting all these harebrained ideas on the base layer of Bitcoin and clogging up the chain, because the importance of being able to run your own node to be government resistant needs to needs to prevail, so that somebody in El Salvador can run a Bitcoin node with a cheap piece of hardware, like a $500 consumer grade piece of hardware and a regular internet connection. And if we've got 10 years worth of degenerate like NFT trades happening on the blockchain, then not only is it going to price people out because fees are going to go up way higher, and then it's going to make it more centralized so that only the rich people can afford to run nodes, which will then lead to government co-option. Then that's what's the ultimate fate of Bitcoin. If we put all the NFT stuff and all the DeFi stuff and all the like gambling apps and just start actually putting apps right on the Bitcoin blockchain and start filling the blockchain up with tokens and token trades, it's like we're not being good stewards of the block space for the next billion people that need to use Bitcoin for the more
Mhm.
important use case. So Bitcoiners kind of decided the way to scale this use case out is to go on second layers, to put it on like a side chain, or to put it on a lightning network type of thing. And that's what Fred Wilson had seen rare Pepes back in like 2016, and he was excited by it. And he's like, look at this, they're doing like digital collectibles on Bitcoin. It's exciting. It's awesome. But then, they call it greenwashing, the Counterparty guys, because they decided because Bitcoin was going to be too expensive to do this on, that nobody was going to want to pay $10 a transaction to trade a digital collectible. Then they would just do it on Ethereum because it's more scalable, and you can do that on Ethereum, and it'll be cheap because it'll be 5 cents a transaction. So all the VCs started investing in things like um, uh, kitties. What is it called? Crypto kitties or whatever.
Yeah.
What's that? What it's called? Crypto kitties. So
There's
long
there
since I've
there
heard that
there's a,
name.
there's crypto everything at this point. So
Well, that was the first one, the crypto kitties. I think that's what it was called. And then that they started investing in that, and just all these Ethereum projects. And it turns out the Bitcoiners were right, because now to make an NFT transaction, it's going to cost hundreds of dollars in most cases, and sometimes even more expensive. If you're going to try to mint something in an Ethereum drop, you're going to pay probably a couple hundred, maybe $1,000 if it's a really sought after insider backed one. So yeah, that you're showing the Nakamoto card there, which is one of the original series rare
It's probably the rarest, right?
Bitcoin collectibles.
Yeah.
I think so. I think there was a bunch of them, but then like some of them got burnt or something like that. So now it's pretty rare.
Yeah.
But this concept of digital art, digital collectibles, it's never going away. And I didn't
Yeah.
think that the celebrities would jump on board with it like they have. I didn't. I thought it was going to be huge, but I thought that because Ethereum was totally broken and unscalable, then they would not, like, I thought logic would prevail. I thought that the people that were pushing this stuff would realize, oh my god, like this is crazy. We shouldn't be advocating retail people and influencing our millions of people that follow us into buying digital art, like digital clip art JPEGs for $10,000 each. I just didn't think that the celebrities were going to jump down that low and go down that rabbit hole. I figured it would be like a Patreon subscription
Yeah.
or like opening up a loot box in your favorite game. It costs you like $5 or something, not like $5,000. So
But if
the
you have
way that
five or
it
ten thousand
scaled
dollars, you're
out,
not exactly a pleb. You're probably not poor, in my opinion.
well, I mean, a lot of people are actually kind of buying these things. They're coming in through
It's
this
all they
like
got.
this FOMO.
Yeah.
They're coming in with the FOMO of like NFTs are the future, crypto is the future. I'm gonna play this game and buy the NFTs on it. And look, Snoop Dogg is promoting it, and Jake Paul is promoting it, and Mr. Beast has some. So all these influential people have it. So they're pushing this like idea that this is an investable asset class. And I think that the NFT bubble is going to go down in history as the stupidest thing humans have ever speculated on. I think it's going to be looked at in like a few years. The NFT bubble is going to be looked at as worse than the .com bubble, worse than the tulip
Yeah, but
bubble.
was the .com bubble that bad? It led to companies like Amazon and Facebook and all these internet companies today that are the entire S&P 500 for the most part, right? The top 6 control like 20% of the value of the entire market, and they're all from the .com bubble, right?
Well, I mean, like that's a philosophical discussion about like are bubbles good for the economy or not.
Yeah.
I think under an Austrian standard, it makes a lot of sense that it'd be more selective. Capital allocation would be a lot more selective under an Austrian standard with a hard money and a sound money, because then you wouldn't have so much FOMO and so much people chasing yield going out on the risk curve or whatever, trying to get yield. So you'd have a lot less bubbly things happen. There's definitely an argument on both sides of that. It's also the same argument. It's like the same argument of like, once we went off the gold standard, like we've had much more prosperity in the world and so many more people have been lifted out of poverty because gold was constraining the ability for governments to invest in programs and entrepreneurs to get funding and build things out. I mean, it's like, it's impossible to argue those sides because you could take principled stances on both sides of it. I just think that the .com bubble was stupid and stuff that people were investing in.
Pets.com.
The valuations, just the valuations and the nonsense, the stories I hear about the .com bubble. It was like people were just like raising money with a name and raising tens and 50, $100 million with just a name.
Sounds like a lot of these like crypto businesses. Yeah.
And that's why, like, I think it's just as dumb. Like you go look at like the historical Beanie Baby investments, and they turned out so good. I think that the NFT bubble is going to be looked as dumber than that. Like the Beanie Babies, at least were
unfortunately, you're ready. You're right for the people that are going to be quote unquote holding the bag, but it is the necessary step towards innovation and for the next step of technology. And I do think NFTs. I think the NFTs are going to evolve into what we talked about. They're going to be like metaverse, and there's going to be like characters and skins and all this kind of stuff. And this is the first iteration. Like OpenSea doing $10 billion a month in transaction value is not going to zero. That's not, like, some of my Bitcoin friends were like, "That's going to go to zero." I'm like, no, that doesn't go to zero. It evolves into something more sustainable.
Yeah, but I don't think you need the bubble to have the technology.
Yeah, you don't need it. It just happens. Yeah, people chase. Yeah, it's yield chasing.
I mean, it's like, in a lot of ways, the NFT bubble is like ICOs. It's very similar to the same ICOs. It's like lottery ticket style insider information.
Yeah.
Some whale is launching a project. If you get the inside scoop on it, you can mint early or you can get on the white list. and then buy it at like a 50th of the price that the public are going to get it, if they can even get it.
Yep.
And creating that artificial scarcity with like limits on how
You
many you
know,
can buy and all that
here's
stuff.
the thing, Brad.
It's the same shit as 2017 ICO bubble. It's just
Yeah.
now it's JPEGs instead of coins.
Totally agree. John Gilardi kind of schooled me up on this stuff earlier in August, July, August, whatever the hell it was. I think it was August, and made a ton of money doing this, right? And it wasn't so insider for him, right? Like he would get in and he was able to look through like rarity tools and look at the different attributes or characteristics, whatever they're called. And he would say like, oh, look at these rarities. And then he would buy up the floor and he'd buy some of the rare ones. And then he had a lot of different wallets, because if you have the one wallet that has them all in, everybody sees you. This is where I got fucked, because I bought a bunch of them and I was just trying to figure it out. And then when I sold them all, everybody got mad at me. And I was like, the fuck you mad at? Like, I'm not like a long-term hodler of fucking chill frogs. What the hell are you talking about? And they're like, well, you have a lot of followers. And when you sold, everybody sold. I was like, dude, what? Like, so I will never do this ever again, because I don't want people like blaming me that I sold and then they sold and they lost money. It was just ridiculous, you know? But John didn't give a fuck, right? So John went out and he made all his money doing this. Now I find it really an interesting thing because of the way he was doing it with the JPEG stuff on the Ethereum blockchain for the way they're doing it. But when Jason brought forth the Rare Pepe thing, he called me up actually when he had the idea. It was me, him, and John talking about it. And he's like, we should corner the market and buy them all. He didn't know how many there were. He thought there was like 1,700 of them. There's 1,700. There's like a bunch of series. There's fucking millions of these things, or hundreds of thousands. It's insane, right?
Oh,
some
millions.
of them. Yeah, it's insane. So when I looked through, I couldn't understand. The way I think is more like in a database, my brain thinks. And so when John showed me what he was doing, I was like, oh, I get it, you know, because it's like the rarity, it's very qualitative, right? But it seems to me that the Rare Pepes are very qualitative. I couldn't quite understand how you could decide what's going to be worth more in the future. It wasn't based on like rarity. It's based on stuff that made no sense to me, right? So do you understand how you value these things? Rare Pepes?
That's why I think that, like, for the most part, it's an insider game. It's no different than the crypto pre-sale bubble that happened in 2017 and it reignited in summer 2020. When the whales and the big liquidity comes in and they start parking their liquidity in pools on DeFi or buying up mints and NFTs, it's market making. And they are making a market, and they're like, it's like their liquidity is a honeypot for speculators to come in and try to follow on and try to replicate their gains. And they feel a lot safer to do it when there's a lot of liquidity in the system. So like the people that started pumping up the NFT thing are the same people that are pumping up the crypto tokens. Like they've got pre-mined money. They've made tons of money from like launching coins or from being in the pre-sale of whatever coin. And then, you know, NFTs as a use case, it does have marketing power for Ethereum because it can attract celebrities and people with influence to come in and then talk about Ethereum. So it makes a lot of sense for people that got $1 billion from a pre-sale. Like Celsius actually was one of these ones. Celsius made $1 billion or more. I don't know what they made. Actually, they probably made more than that at this point from their Celsius coin, from their pre-sale, like selling their coin. They funded this anonymous NFT dev OXB1. And so they gave him like 100 million or something like that to go and just buy NFTs and just pump the market up. And so this guy OXB1 just went and started buying shitloads of NFTs. He was doing DeFi stuff too, but he became known pretty well known in the NFT space as like an NFT whale. I'm sure there's many more people like that. Like Metacoven is another guy who bought the $69 million Beeple, which was one of the big events that kicked off the whole NFT space. And he's the creator of this coin, B20, I think it's called.
It's just a flex, man. Yeah.
Well, it's not a flex. It's actually like he created a coin. He printed a coin.
No, I'm saying buying something for $69 million is a JPEG, and you're really just buying the hash. Like, what? Why are you doing that? You just want people to know you did it.
Well, that's what I'm saying. It's not a flex. It's actually like a more sophisticated marketing scheme because he has a coin, which he has a coin B20, which is a index of Beeple artwork on the Ethereum blockchain.
Yeah.
So he has and he pre-mined it. He owned the majority of the supply of the coins. So it's in his best interest and people invested in the coin. So he made a shitload of money on the coin.
Yeah.
So it's in his best interest to pump up the price of Beeple NFTs. So if he can buy the Beeple NFT for $69 million and then put it in his coin, all of a sudden his coin's market cap goes up and his coins that he printed are worth more. And then he can go out and sell these B20 coins or whatever to everybody else. And it's just like it's kind of like a circle jerk in a way.
Yeah,
And
but the guy buying some other, NFT, like they see that and they think, I mean, I'll get a 69 million, but that's not going to happen. So let me ask you this though. So I was trying to understand.
It's a honeypot, I think. Like the investment class NFT stuff, in my opinion, it's a marketing expense. It's a honeypot. It's a kind of way for opportunists to come in and make a shitload of money by either buying up their NFT sets or launching NFT sets or whatever.
Sure.
But I think it's bad for the concept of NFT adoption long term because it's a bubble. It's an insane bubble. It's insanely overvalued. Yeah, and now you got all these people trying to use logical jujitsu to try to rationalize the valuations of these insanely priced things when it's going to blow up. Like this bubble cannot last. And then you're going to have a bunch of normies being like, why did my favorite actor show me a freaking
why did Gary V sell me his stupid doodles?
Yeah, why did Gary V tell me I should buy his NFT and then
his sketches
now it's worth nothing? I don't know. Like Bitcoin Tina says this and I agree with him that like in a few years people are going to look back and be like, what did you do to me? Why did you tell me to buy that thing? Why did you tell me this was valuable? Like there's a lot of
tell me one more thing before we move off NFTs. What does it mean to have a dank and a rare pepe? What the fuck are they talking about? The dankest rare pepes. Like, what is that?
Dank is like a mixture of funny and artistic, I think.
And how do you determine what that is? That seems to be very subjective, right?
The rare scientists tell you how dank it is, and then you just listen to them.
It's so stupid. Okay, let's move on. Obviously,
no, I invest in Diba, which is a digital art platform being built on Bitcoin on the Lightning Network. I've invested in Scarcity. Yeah, Scarcity is another one doing digital art auctions and physical art auctions. They're Bitcoin only. I invested in Blockade Games, which is a crypto gaming company. Like the founder Marguerite, she was building Bitcoin art back in the day, and in 2019 or 2018 when I invested in that, she was building on the Lightning Network. Like she was building a game on Lightning. And Samson Mao, co-founder of Blockstream, has Infinite Fleet, which is like a real-time strategy game. It's like a AAA looking game that's in alpha right now, built on the Liquid network using NFTs and a security token. So like there's ways that you can do this in compliance with Bitcoin culture and in compliance with values of a Bitcoiner that is not pumping tokens and pumping NFT prices. And that's what I try to align with, because I think it is important and really long-term valuable for Bitcoin. Like Jason Williams says this, and he's right. Like people coming into Bitcoin through rare pepes are learning about this culture of Bitcoin. Correct. They can have fun too. They're learning about
wallets for the first time.
Using Bitcoin wallets. That is important. I think he's right about that. Yep. So I do like to support Bitcoin stuff, and the Bitcoin stuff typically doesn't have as much insanity and pump and dump culture as the crypto stuff, which I like as well.
Yeah. And listen, that leads me into Pleb Ventures and how you have this Telegram chat where people informally are kind of floating deal flow for Bitcoin companies. We're all investing in these types of companies. I came to you, about a month or so ago, and I was like, I want to raise a fund to invest in Bitcoin only businesses. And you were like, yeah, let's do it. So we're exploring that opportunity right now with Scaramucci and a few others. Obviously, he put money directly into a fund to buy the underlying asset. And I was like, what you really want to do is you want to invest in the Bitcoin rails, right? You want to invest in the infrastructure of Bitcoin, as well as this type of stuff too. The stuff's going to live on top of it on the second layer and stuff. So let's talk about that. Let's talk about what that whole, the kind of your Pleb Ventures Telegram chat, the deal flow that goes through there. It's like at the end of the day, Bitcoin's been around since 2009. We're going on 13 years rather, 2009. And when was Ethereum? 2015 or 16 when that first came out, right?
I think it was 14.
14? Okay. Yeah. So, and yet it's grown tremendously because of essentially what's living on top of it, right? It's not because of the underlying asset itself, right? So all these VCs that you talk about, right? They're investing in things that if there was an ecosystem evolving on top of Bitcoin, I'm pretty sure they'd be investing in it too. It's not like they're anti-Bitcoin. They're just capitalists. As you said at the top of the call, we said that you are by the way, you mince it back and forth. You're a Bitcoin capitalist. You also said you're a Bitcoin maximalist. It sounds like you're more like a Bitcoin capitalist, right? So let's talk about investing in Bitcoin companies and the second layer and the Bitcoin rails.
Well, yeah, man, I think the difference between a capitalist and a Bitcoin capitalist, and this is just what I've been thinking over the last like month or so, is it's like a Bitcoin values plus capitalism, in that you do believe in the mission of sound money, and it's almost like Austrian capitalism, but Bitcoin values. So I'm a Bitcoiner. I will invest Bitcoin into businesses that are, building tools on Bitcoin, or people are doing something for Bitcoin culture. People are supporting open source development. People are building second layers, or, working on research, because there's a whole bunch of different areas where like capital allocation is needed to help Bitcoin compete with the pre-mine benefactors over at the Consensus, and the Ripple Foundation and Stellar Foundation and Solana. Like, all these companies have massive pre-mines that, because of the 2021 bubble, have just super inflated their treasuries. And it's not that people aren't investing in Bitcoin. Like, we just saw NYDIG raised $1 billion. That's the biggest round in a crypto company ever, as far as I understand. I mean, there's some crypto funds have raised over $1 billion, but like a Bitcoin company, I think, like a crypto company in general, I think that's the biggest round ever. There's quite a few exciting things that are happening in Bitcoin, and thankfully that would I would be a lot more nervous and scared of crypto stuff defeating Bitcoin if we didn't have Michael Saylor, if we didn't have NYDIG, if we didn't have Spiral, like Square just rebranded the Block, and Square Crypto rebranded to Spiral. Like, Jack Dorsey's focusing on this. The Human Rights Foundation is out there advocating and evangelizing for Bitcoin and Bitcoin open source development. Brink Bitcoin's doing a great job, led by John Pfeiffer over there on the institutional side. Fidelity's like big into Bitcoin. There's a lot of big like sound players in backing Bitcoin stuff. There's a couple new venture capital firms just got started at 1031. There's them. There's
how much do they have in AUM? How much did they raise?
I can't recall. I think it was like 30 million. I felt like it was their number. I'm not sure though. But it's like,
is it all individuals that invested, or do they have institutional money?
I'm not sure. I'm not sure what it is exactly. I just know that it's like Matt Odell and Marty Bent are helping them out.
Yeah.
There's quite a few funds that are like
there
Bitcoin
needs to be
only
more
now.
though. Yeah,
There needs to be more, and I think, like, Blockstream just raised a mega round as well, and they're focusing on things like the Bitcoin bonds and stuff like that, like the Liquid network and security tokens, which is a super important thing to have decentralized digital securities, and they're building NFTs out on the Liquid network too. So I just think that it's like imperative that we compete with those guys and we get more capital allocation going to Bitcoin founders, because there's a ton of young people that are excited about building on the Lightning Network. Totally. And there's this narrative out there because of the 2021 crypto bubble that like DAOs and DeFi and NFTs, like that's where you should be going. And because A16Z and all these like, respected influencers in the startup space, like we talked about earlier, Kevin Rose, Tim Ferriss, folks like that, they're all backing like this concept of Web3 and NFTs, which to a Bitcoin capitalist, you look at that and you're like, that's like totally not democratizing the web. That's like centralizing control even more to the same VCs that got rich off of Web2. And now, like, instead of you being the product, you're the like exit liquidity for the VCs in the pre-mine. And it's like, how is that any different? It's the same oligarchs of Web 2 that control Web 3 mixed in with some lucky 100,000 or 200,000 people that caught the FOMO because of they were watching their Twitter accounts and, you know, YouTubes and listening to podcasts of their favorite influencer and got in early on some of this shit. But it's so small. Like the amount of users using DeFi right now is tiny, man. It's like they look at the active addresses and they like to say that there's millions of people using this stuff. I would agree that there's millions of people using play to earn gaming on BSC and on Flow and Wax and these different blockchains, but Ethereum is too expensive for regular people to use. Like people can't afford to use Ethereum. So the only people using Ethereum are these rich VCs and these insiders that have gotten rich and crypto traders who value the ability to use decentralized exchanges. And that's what I say, like I like to play around with it because the technology of decentralized exchange is interesting. There's something there, but it's the things that are being traded and these like derivative like schemes of folding in your liquidity pool token and getting another one, and then you earn yield on that one, and then you like put that into another one, and then you get another yield on top
There's
of
no
that.
value. Yeah.
It's like it's like synthetics from the mortgage industry that took down the financial system. Like people couldn't properly assess risk, but they were just making buckets of money, so they were just full steam ahead. And that's what I fear is happening with the whole Web3 thing and the NFT thing in the broad picture. And because of all the excitement around the high APYs, I get so many entrepreneur friends coming to me saying like, I'm gonna throw $1 million into UST on the Luna network because I'm getting 20% APY. Like that's pretty safe. I'm like, oh my God, like what are you doing? You're just falling for the honeypot because these high APYs, it's like these are critical thinking skills. Like how can that sustainably happen?
Yeah, like how are you getting that? Yeah.
50% APY over on Curve. If you put your stable coin in the Curve pool or whatever and fold it once or twice, like that's gonna freaking blow up at some point, and you'd be lucky if you get your capital out. Like you'd be lucky if you get your principal out of some of this stuff. But it's not to say it's all shit. It's not to say it's all not valuable, and it's not even a commentary on the technology. The technology is interesting, but you can't separate the technology from the coins because that's what DeFi is. That's what Web3 is. Like you say Web3, and the people that like think like the crypto people will say, "Oh, you just don't like innovation." Like, no, I just don't agree with the idea that this token has any value and that you promoting that token to people is a good thing to do with your time. And, you know, you can build that technology on Bitcoin. It is being built on Bitcoin. We got Spiral, we got TBD, we got John Carvalho's Synonym. We've got a bunch of companies like LNPBP, like Giacomo Zucco's company. They're building RGB. All this stuff can be done. Digital identity, digital exchange, decentralized exchange. It can all be done on Bitcoin or on decentralized distributed ledger technology without altcoins. And I just think 2021 has, because of the money printer and because of the Federal Reserve's policies, have created a massive like boon for crypto coins and the NFT bubble. And because all this money is going into the VC pools, most of it's getting directed towards crypto. It does take the spotlight and the eyeballs away from Bitcoin.
Yeah.
So what can I do about it? We can start pleb ventures. We can share some deal flow. We can highlight Bitcoin-only entrepreneurs. We can invest in people like Bernard Farah. I'm sorry if I'm pronouncing that wrong, but he's an entrepreneur from Nigeria who we met on Clubhouse. He used to come into Clubhouse in January, February, and he was talking about the problem that Nigerians have with using Bitcoin because of the rules with the government over there, and you know how everybody pretty much has access to cell phones. And he's building a Bitcoin-only Lightning Network enabled place for like 200 million Nigerians to go and buy Bitcoin, just like the Cash App. So it's stuff like that I like to invest in. It's people building Bitcoin globally. Galloy Money, they're the people that built Bitcoin Beach in El Salvador that ended up becoming the impetus to like have the whole country adopt Bitcoin. They're doing community Bitcoin banking using Lightning Network wallet. That's a company I invested in. I mean, I say Bitcoin capitalist because I believe that like backing companies and founders that have the Bitcoin philosophy, the same Bitcoin philosophy as me, is going to end up helping Bitcoin and helping accelerate the adoption of sound money. And it'll make me like really lose Bitcoin. Like I probably won't make back
They
my
won't all,
Bitcoin.
yeah, you won't, you probably won't, if you invest in enough companies, you're not going to outperform just buying Bitcoin, but you have to move the ball forward.
You know, it's like I'm paying my Bitcoin tithing because Bitcoin changed my life, and Consensus and all those guys are out there competing with Bitcoin, you know, with their pre-mines. So it's pleb ventures because we're not going to be able to like have the same size treasury as Consensus has, you know, or somebody like that. But together we're pretty strong. And, you know, if we kind of like as a crowd swarm of Bitcoin capitalists, if we can, do angel investing and VC investing into Bitcoin only companies, then I think we can make an impact in some
Right.
small way.
I just think we got to get real money, and institutional money needs to come in a big way, like it did in the Ethereum crypto, space, right? In the shitcoin space, with all the venture capitalists. They're not
Yes,
investing in the Bitcoin space because they can control the narrative. They get the pre-mines, and that's where they're making a
exactly.
lot of their money, right? But if we can push the narrative forward, and look, all of this is essentially a lot of angel investing, and you don't see like the next Google coming from just angel investing. You have to go to that next level for your Series A, Bs, and Cs, and that's where we need the real money to come in. So I think it's great that what you're doing, and I think it's great what Corey's doing with Bitcoiner Ventures rather, which is a syndicate on AngelList. And I think these are all important things to do. But I think I'm trying the best that I can. If I can help do something as well, I'm trying to see if we can get some real money in here too as well, for like a large $100 million fund. I think that would be amazing. So
Oh
and
man, that would be
more
epic.
people need to do that.
Yeah, we could totally do that and help a lot of entrepreneurs that are
Absolutely.
out there like looking at the crypto casino, being like, why can't I get some of that money? And
That's
you
why
know,
they go to the dark side, because that's where the money's
that
at.
you know, like if you're a principled person and you're like, I don't want to contribute to the shitcoin casino, but like I want to get funded, and where's the funding going to come
Yeah.
from? Like that's why I would love, man, to put energy towards that. I think it's needed. We need as many as possible,
Yeah.
uh big money funds coming in doing Bitcoin only stuff, because there's a lot of people that are out there deserving of the funding, and
And,
there's a
and
lot.
listen, like 1031's doing it great. Like I didn't realize it was that big. I thought it was like a $10 million fund. $30 million is good. Their next fund will probably be like 50 to 100 million plus. And then as the years go on, they may have a $1 billion fund in the future. They have to perform on these investments that they have, right? Their portfolio has to do well. And I'm sure it will, I'm sure it will, because there's a lot of growth in this space.
Measured in fiat for sure, but I
Correct.
don't. It's going to be tough to beat Bitcoin buy and
But that's
hold
not
over the
their
next
money.
10
If
years.
you're going to raise a multi-$100 million fund, they are measuring their returns in fiat anyway. So
Yeah.
they'll do fantastic. They'll beat the S&P. They'll beat any other benchmarks that they're looking at. But from a Bitcoin perspective, you're right. It's not going to outperform Bitcoin, right? More likely than not. Although moving forward, listen, if you go into the out years, I don't know what we should talk about that next, because the next thing I want to talk to you about before we hop is stock to flow and price of Bitcoin for the end of the year and all this kind of stuff with the expectations and the expected return of what we thought and where it ended up shaking out. But at the end of the day, those investors coming into these funds, they're not thinking that way. American HODL always thinks that way. In fact, when I told HODL I wanted to do this fund, and I told you, and you wanted to get involved, Preston said he wants to be involved, Greg, Jeff, Booth, like all these guys want to be involved in this. It seems like there's a lot of demand and interest for this. So, and then I talked to Scaramucci and he was interested in it. So it's like, I definitely see a movement. And HODL, who doesn't invest in anything, was like, I'll invest in that. I'm like, holy shit. Even American HODL is going to make an investment. It's like, because it makes sense to do that, because it actually, even though that particular amount of capital that you invest is not going to outperform, it makes your underlying assets succeed over the longer term. So you can't look at it so linearly. But let's talk about stock to flow. Is Plan B done? Is he gone? That's it. We don't need to hear from Plan B anymore. What's going on?
I mean, like I like stock to flow as a meme.
Yeah.
I don't like stock to flow as a
Bible.
legitimate analysis, because like I used to say this, but then like whatever, he just got so popular. But the stock to flow ratio is a great marketing piece for institutional investors that believe in the stock to flow ratio. The same way that the Bitcoin Citadel meme is a really great way for plebs to like believe in Bitcoin because they believe one day they're going to have the Citadel if they just hold Bitcoin. It's, to me, they have the same energy. They're just like, one's for a pleb and one's for an institutional investor. but they're both memes and they both don't really have any real like validity or whatever. It's just like fun energy. Like the stock to flow ratio, in my opinion, like pumping the stock to flow ratio as if it's like legit is dangerous,
Mm-hmm.
because then you get all these people that don't understand the importance of why Bitcoin's price is where it is. And it's not because of the supply shock, it's not because of the halving, it's because of decentralization, and it's because of the long-term credible scarcity. And that is a great term from Jimmy Song, long-term credible scarcity. I
Yep.
used to just say
I love that.
scarcity or
Yeah.
digital scarcity, but he had
Credible.
his phrasing of long-term digital scarcity is like super important
Long-term
and relevant.
credible digital scarcity. Yeah.
Yeah, because like if you have hard forks of the monetary policy every couple of months or couple of years, then your credibility counter starts over at zero.
Mm.
And Bitcoin's got the longest credible scarcity of any digital currency or
Established
whatever.
history. Yep.
It's going on 11 years or whatever now, and nobody's able to change the monetary policy. And so the stock to flow ratio is dependent of the long-term credible scarcity, and which is dependent on decentralization. So there's like a hierarchy of what matters in these different like pillars of importance of the network effects of Bitcoin. And decentralization is one of the biggest ones. Of course, institutional adoption and things like the halving cycle and liquidity, developer mindshare, merchant adoption, wallet growth, like adoption globally, all these different things matter, but they all matter in a picture of like all the pillars of Bitcoin. It's like the Parthenon of understanding Bitcoin has a bunch of these pillars. It's not just like stock to flow ratio is why Bitcoin is going up. That is what a lot of people unfortunately kind of like they became religious almost to the stock to flow ratio. And it doesn't matter to me whether or not the ratio or the model is invalidated, or I think Plan B called it a statistical anomaly or like a black swan or something like that, and he's
It's an
readjusted
exogenous
it.
event. Yeah.
Yeah, but like the problem is when you really put too much credibility in the stock to flow ratio, you can then weaponize that against Bitcoin if you're like either a no coin or Fuddite, and you're like, oh look, the stock to flow ratio broke down. Like it's just another attack they can use at us, like the same as the Bitcoin Cash fork. Like they were trying to use that. The same as the Chinese mining concentration, they would use that. There's all these different attack vectors they can use, and the more powerful a meme becomes in Bitcoin, the more likely it is that people are going to use it as a weapon. So I mean, I'm glad that the stock to flow ratio meme didn't get as powerful as it could, because you had a lot of resistance to it, and a lot of people were just like, "That's just a meme. Like, just forget about it. Learn about why Bitcoin's
I mean,
important."
listen, Corey says this, and they were on like Spaces one day, Corey and Jimmy Song, and then I had Jimmy Song on my show like probably like a week or so after that. And his whole thing was like, listen, I don't want to get into it. He's like, we'll see what happens at the end of the year. He's like, I believe in it, So, well, here we are. We're pretty much at the end of the year. I don't think we're going to get there. Anything is possible, but probably not likely,
I don't think so, but I mean, the thing is that if you believe that the reason why Bitcoin is at the price that it is right now is because of the stock to flow ratio,
Yeah.
which for people who don't know, it's the supply issuance divided by the total supply, and like projecting that out based on the halving cycle, and then doing some kind of price analysis. Like I think it's like a moving average price or something like that. But just basically that concept of taking that analysis from the gold markets, which like tries to model how much gold is being mined and what impact that will have on the price based on the supply coming to the market based on the total supply. If you try to apply that to Bitcoin and then say, oh, Bitcoin's valuable because of this, then you can then what we saw with Ethereum this last like 6 months or so ago, when they were doing the EIP 1559 thing, which is now a way to burn Ethereum so that the fees, instead of going to the miners, would be burned, which will be a disinflationary pressure on the supply of Ethereum to make it lower than Bitcoin. Then you get all these institutional guys and these Wall Street guys that drank the Kool-Aid on the stock to flow ratio of Bitcoin, thinking that's why Bitcoin's valuable, going like, oh man, I just found out Ethereum's stock to flow ratio is going to be lower than Bitcoin. So that means Ethereum's going to flip Bitcoin, or, get Raoul Pal out there pushing the narratives of like the supply lockup of Ethereum and the supply, the stock to flow ratio of Ethereum is going down, and therefore it's a better investment. So that's why I think it's a dangerous narrative to push, and why I never got involved with stock to flow ratio.
Where do you think the price is going to end up by the end of the year? We only have like a week left, 10 days.
No clue, man. Like 69,420 would be nice.
Exactly.
Be a nice way to end it.
That'd be funny.
Yeah, I think in longer term time frames.
Yeah, so 10 years, where's your 2030 to price?
I got to think that like the $1 million Bitcoin, the $20 trillion market cap would make a lot of sense, and that's kind of my mental model.
I think 100's going to be tough to break. I'm not saying it's going to take that long. I'm just saying that is going to be a level where people are just going to keep trying to front run that as it starts to get approaching it. So it's like 20,000 was tough, right? So you get to 20, and then when you broke through, it's like all bets are off. It starts to fly through the roof, right? So I think 100 is going to be a resistance level, and you got to get through it,
I think the biggest threat right now to Bitcoin price is the crypto markets. Before you had a lot of retail adoption of Bitcoin, like most of the retail speculation would come in through Bitcoin, and the retail speculation and like the millions of people that have come in 2021, maybe even 100 million people that came in 2021, they mostly went through the crypto rabbit hole and the NFT funnel. Yeah. And like that sucked a lot of the network effect value and also like dollar value from the Bitcoin network and put it into the NFTs and DeFi and play to
earn. I mean, the price would have been crazy if that weren't there. Think about it.
Well, in a way, there's a good thing about that, and there's the bad thing. Like the good thing is that those people that are more speculators and casino minded, and they're attracted by just the get rich quick of crypto, they're not sell pressure on Bitcoin. So they'll go over and they'll play in the crypto coins, and they'll do all their degenerate gambling stuff in the crypto coins. And like the retail speculator crowd that would have went into AMC or GameStop, instead they went into Dogecoin and Shiba and whatever NFT series or whatever, or SafeMoon, like, or whatever coin, Ripple, whatever it is. I mean, they come rocket.
What's it going?
Yeah. all those coins, they're not the type of like shareholder that you'd want holding Bitcoin for the long term. And I would love to speak to those people, and I want to educate those people, because I was one of those people when I was younger. I had no clue about financial markets. I didn't have a clue about investing, and I was just like trying to make money online. So I really empathize with those people that get sucked into these narratives and go down the shitcoin rabbit hole. And I mean, I think we got to do a better job of speaking to those guys and educating them about really like pay attention to Bitcoin. This is where the real shit is. This is where the innovation actually is. It's not like a casino over here. It's just long-term value. The things like American HODL and Bitcoin Tina talk about. Try to do it in a way that meets people where they are and show them the value of Bitcoin, and to show them that, like, you've been taught a lot of bullshit about Bitcoin by the coin founder that you've got, or the trader that you follow on Instagram or TikTok or whatever. And you got to learn some shit about Bitcoin, because you're being misinformed about what Bitcoin is and what it can do and what's being built on Bitcoin and how Bitcoin can do transactions in the like millions per second at sub a penny. And like, you don't need Dogecoin for like Elon Musk out there telling people you need Dogecoin, and the better way to do it is to scale it through the second layers, like the exchanges, to scale Dogecoin. That's totally nonsense. So we did have a lot of people going wide out through the wider cryptoverse this year and into the NFTs and stuff. And in one way, you got institutional investors and high net worth individuals getting sucked into the DeFi narratives with the high APY Ponzi schemes, that they actually take like serious amounts of their portfolio and their savings and they put it into DeFi smart contracts. That is not good, because maybe they're the type of people that actually we would want as shareholders of Bitcoin. we would want them to kind of just go a little deeper and learn about the value of Bitcoin, but they've been attracted by high APY Ponzi's over on DeFi. And like, if we didn't have this bubble in 2021, we would have a lot more of those people probably coming to Bitcoin because they'd hear Michael Saylor and people like that speak their language and show them the value of Bitcoin. But, money talks. So because A16Z and Sam Bankman-Fried have incentivized these giant APYs on DeFi, they've kind of won the battle a little bit with some high net worth investors. We used to think like, there's only 40 million millionaires in the world and there's only 21 million Bitcoins. So if all millionaires tried to get one Bitcoin, they couldn't, the price would moon. Like that was kind of a strong meme. But now it's like, there's 40 million millionaires in the world and they all think in terms of percentage return. And they go and they see, some DeFi thing is giving you 20% return. Like they're a lot more tempted to go and throw their money into that. So that's why we saw the like USDC and USDT grow by over $100 billion this year. It's nuts. Like there's a lot of money coming into to play with these high APY farms and stuff and do trading. So that's like I kind of agree with Bitcoin Tina's and Willy Woo's take of how this is going to play out over the next 4 years. I think it's just going to be a slow range bound, like Tina says, bore you to $1 million. I think that might actually be, how it shakes out.
Willie was saying that too? I didn't realize that.
Willie says that too. Yeah. He didn't say that bore you to $1 million, but he talks about how he thinks the 4-year cycle is done and that's just going to be a slow growth from now on. It'll be volatile, but it won't be like 80% drops. It'll be like 40 to 50% drops, but it'll be like upwards long term. The only thing I worry about is that like, or wonder is when this friggin' crypto bubble is going to pop. I just don't have a clue. I used to think like, there's no way. And
Q1.
Last year, there's no way that the 2017 ICO bubble
I think we're connected to the markets still, right? And to the Fed's responses. So I think when the Fed, sometime in Q1, I think we're going to see the actual markets crash. And I think crypto will come down with it because everything will just be, it'll be a liquidity crisis as it starts to crash. So that's when you'll see a bit of a crash and the Fed will have to respond to it. And just, that's my opinion.
That's one risk, and then that's for all of crypto, and that's for Bitcoin as well. But the other risk that's more for crypto only is the regulations coming down from the CFTC, FinCEN, the SEC, all these different agencies. They're like FATF. They're all trying to get a piece of this regulation pie, and try to like make crypto bend the knee. And I don't think that's I don't think that's 100% likely that it's going to happen and that they're going to come in and strangle the crypto stuff. I think it's probably 50-50 at this point. I mean, it's a pretty significant risk, in my opinion, that some DeFi regulations are going to be coming, and the same for NFTs.
You think that's going to hurt Bitcoin though? Because it's not going to cover Bitcoin, right?
I do. Yeah. I think, unfortunately,
just out of, it'll spill over to fear in the space.
Fear, but also like, the people that came in this year, the 100 million people, maybe it's lower, whatever it is, they came in with this thinking that like Bitcoin and crypto, Bitcoin and Ethereum, DeFi is like Web3.
They're probably diversified or something. Yeah.
They're like believing, like during Bitcoin 2021 conference that Bitcoin Magazine put on, they had Mike Novogratz on talking about institutional adoption and stuff. And he said something that really worried me. He said that they're training this wave of like 4,000 financial advisors to go out and educate high net worths and funds and family offices about, and he said, well, you start with Bitcoin and then you go down to the other stuff. So it's like, duh, like what he's doing is trying to sell them his funds. Like Galaxy's got a bunch of shitcoin funds and index funds and stuff. And you start with Bitcoin, then you go to Ethereum, then you go to like Algorand, and then you go to all these other coins.
I mean, even Scaramucci did, like, he raised $500 million, I think, for Algorand. It's like, wow. I mean, that's a lot of fucking money.
Did he really raise that much for Algorand?
I think he was he was part of the raise if it wasn't just all him. But yeah, it was a $500 million round, I think.
I know they did a massive round, but I thought it was, anyways, like that.
Incredible.
That is happening.
Yeah.
And now you got these financial advisors going out where, like, earlier in the year, the narrative was, okay, oh my God, like, you got people like Druckenmiller and Michael Saylor and Dalio commenting on Bitcoin. These guys are all talking about Bitcoin, and now it's kind of coming out that there's a real concerted effort by the people in the Wall Street raccoons, as Ben Hunt likes to call them, that they're going out there just to make money and make fees, and they're relentless about what they're gonna shill to people. So they're just gonna shill whatever crypto coin there is. So because of that, oh, is this what it says?
Yeah, I'm
Borderless
just trying to
capital.
find it. I'm pretty sure. Here we go. He was impressed by algorithm technology.
I think he was just part of it.
He was just a part of it. Yeah, I don't think he did the whole thing. I think he was involved in it in some way. Not quite sure. It's interesting.
But that is kind of the reality of 2021. A lot of people have like Bitcoin and crypto are in their minds, and there's a strong push from the Wall Street guys to sell all kinds of other exotic products because they can make more fees on it. And there's a strong push by the VCs to sell all the DeFi stuff because they can make tons of money on the early round investing. And there's also a strong push by regulators to come in and, tame this market. So while at the same time, there's a bunch of competing interests in crypto only. So like Binance, FTX, and Coinbase are kind of the biggest, and now crypto.com are kind of the biggest. They're competing with each other. They've all got competing narratives. Like Solana is backed by FTX. Binance is backing Binance Smart Chain and BNB. Consensus is backing with A16Z Ethereum. And like they're all competing for developer mindshare and smart contract narratives within crypto. So like in a way, like long-term Bitcoin, it doesn't matter. Bitcoin's going to win in terms of store of value, but in the short term, they're competing with it for store of value and for money. They're all competing as money. So when the regulators come in and they tame the market, there's going to be a lot of confusion. I think people are going to sell Bitcoin thinking that this applies to Bitcoin, but there will be a lot of buy pressure on Bitcoin because a lot of people in some of these riskier things are just going to pump it into Bitcoin. So I don't know what's going to happen, but I don't think volatility is going away.
No. I talked about this. I talked to this briefly on Spaces with Sailor at one point because I think that the tax wash sales I'm talking about, rules, if they could eliminate that so that people can't sell when it drops, take the loss buyback right away. If it applied the same way wash sale trading rules applied as they do for stocks in the US, I think that would smooth some of the volatility out. It helps a little bit, but listen, 2 hours, we did a pretty good job here. I had real fun doing this with you. I'd love to do it again. But everybody knows where to find you, but where do they find you? Twitter, wherever else? Tell us.
Yeah, you can find me on Twitter at Brad Mills Can.
Cool. And you're also on Clubhouse every night.
Yeah, I'm on Clubhouse whenever I'm walking or doing some chores or whatever in the car. Yeah. I think everybody should check out Clubhouse. If your listeners aren't on Clubhouse yet, and you should come back too, Jay. I haven't seen you on very much lately. You got to come back every once in a while.
I pop in once in a while. Just not as often. I was on every day, all day.
You're very productive now, though, that you got off Clubhouse.
Absolutely.
You're pumping out episodes like crazy.
Yeah, man. That's like, I'm just like doing this all day for the most part. And I'm just spending more time with the kids too now. So the kids are actually home because, this whole COVID thing, this is stupid. This is the most ridiculous thing. My daughter was in a classroom exposed to somebody with COVID, so she had to get tested. The school kicked you out, basically. You got to get tested. She gets tested. She's negative. And then they said, well, now you got to quarantine for 14 days in case it's a false negative. Meanwhile, she lives in a house where we're all exposed, as well as my other daughter, and she gets to go to school every day. Like, this makes no sense.
It's ridiculous.
So we told them, we were like, because of the holidays, like, well, it's logic, it doesn't make sense. Do you mind if we just keep them both home? Like, oh yeah, that's great actually, but we're not allowed to just tell you that. I'm like, this is the stupidest thing I ever heard. So I've been spending a lot of time with the kids too. So
that's good, man. I'm glad. So you're enjoying your break from Clubhouse.
I am enjoying my break from Clubhouse. I mean, we just divulge into nothingness for the most part on Clubhouse, as you obviously know. It's like you go in there and I'm not even talking about Bitcoin for the most part. It's like we're just talking about stupid shit that means nothing.
Yeah, it's a social club.
It's basically just like people hanging out talking.
Yeah, it turned into a social club. I think we should reboot the effort. Last January, February,
it was amazing.
It was effective. Like people.
It helped me. It
Me
helped me
too.
tremendously. I was like, it
Yeah,
just
me
like,
too.
what I do is I'm doing a lot of phone calls with my friends and stuff now too. So I'm talking to like real life people that I know, and they're asking me questions, which I can now field the questions much better than I was able to before. And the funny thing is, they ask the exact same questions anybody else asks in the beginning, like, "What if this? What if that? Yeah, banning the
Yeah.
government, this, that." And you're like, "Oh my god, you should go on Clubhouse." I go, "Actually, don't go on Clubhouse. They're just going to talk about bullshit. So you're not going to learn anything anymore in Clubhouse. There's really nothing to learn anymore."
Yeah, I
And
know.
it,
I used to tell all my entrepreneur friends, "Hey, just go to Clubhouse, go to the
yeah,
Cafe Bitcoin rooms, and just
yeah.
listen." And then they'd come back and they'd be like, "Yeah, I went into that room and they were talking about prepping for the like how much ammo they should have, and
Oh my
what
god. Yeah, there's a
didn't
lot of
really have
that going
much to
on.
do with Bitcoin."
The other day
But
I popped
oh
in,
man,
right? And like last night too, but the other day I popped in, not last night, a few days ago, I pop in and Hoddle saying, he's like, "It's a 3-prong push-up." And I'm in the audience and I'm like, he goes, "It's like 3 prongs, and it's like, I don't know how strong you are to do this. And you'll be able to do push-ups with 3." And then they get John Facori brings me up, I come on stage and he mods me and I'm sitting there and I'm not saying anything, right? And he's like, "If you don't know what we're talking about, I'm talking about, your penis, your legs." I'm like, "What the fuck are we doing here, guys?"
totally relevant to the Bitcoin mission.
It's like there's just like it's so childish and adolescent, the way we act. But I have fun doing that too. I'm not saying I don't, but that's all it seems to be these days. I'm like, there's
Yeah,
really
we
no
gotta get
intellectual, there's no intellectual
we
conversation
gotta
anymore.
dial it back a little, get back to the old Clubhouse days where we were
Yeah,
doing something helpful and
what
useful.
I think it largely has to do with? It's boring to say and answer the same questions over and over. So I was one of the first people to break out of that when I did the digital gold rooms. And I was like, okay, let's just talk about anything we want to talk about. So me and Lamar would start those rooms in the morning and we would talk about sports, we talk about life, lifestyle, current events, whatever, as well as Bitcoin, right? But even John Gilardi was like, "How many times do I get to hear Bitcoin? I hear Bitcoin 20 fucking thousand times a day. I'm tired of hearing the word Bitcoin." Just like, it's just gotten a little boring, I think, to hear the same thing over and over again. So,
Yeah, I think it's useful for new people
yeah,
that like if the conversation is about Bitcoin, where you can
yeah,
have the Bitcoiners kind of go through those talking points with you, because a lot of people think the same things. It's common questions. So it's very helpful for new people to come in and learn about Bitcoin and
yeah.
get like solid Bitcoin logic and Bitcoin information from really well spoken Bitcoiners. But that's work. Like, so you just want to hang out and talk
I,
shit. So after a
I
while, you
will
just start
say, like,
devolving.
it was much different then too. Like Jimmy Song was on a lot. He stopped coming on. CJ Wilson was on a lot. He kind of stopped coming on. Like we lost a lot of quality people on there. And I'm not saying the people that are there aren't quality. There are, but it turned into more of a social club to your point, right? And
Totally,
those
yeah.
that didn't want to just sit there and bullshit about nothing with people they've never met in person or only once or twice, they're like, okay, I have a real life too. So I'm going to move on if we're not going to talk about the thing that I'm interested in. So it kind of turned into that for me because it really turned into like a little bit of shit talking and clickiness. And I was like, this is like high school. I don't need this shit. Like I have other real things to do in life. Like if this
Yeah,
is what you guys are
it
into.
was a special thing we had going there
Yeah,
for a few months.
it was great. No, and I
It's
think it could turn into that. I think in a new bull market, it'll probably turn into that all over again because the interest comes in, all the people start coming in. But it turned into like it really turned into I used to say it's kind of like the Howard Stern show in some ways, like we're characters on a podcast in a way, and it's kind of what it
yeah.
is. But the content that we're talking about, I don't know. The Mensa stuff is just boring to me, to be honest with you. I just was whatever.
Yeah, I think like that's a problem with most Clubhouse too. Like all the other there used to be so many rooms on like Dogecoin and crypto and NFTs and BitClout and all this stuff. And they all died off too. Like you
Yeah.
rarely see any of those rooms. Like some of the crypto rooms still go and there's like 30
Bro,
people
I'll
listening
pop
to
in on
it.
Clubhouse, Brad, sometimes in like the middle of the day, 4 o'clock, and there's not one room on anything crypto related, Bitcoin or otherwise. And I'm like, Jesus Christ! Like there used to be a running room all day for Cafe Bitcoin. Sometimes it's not there, particularly on a weekend. I think every weekday there's usually one. But then I've also noticed like Black Bitcoin billionaires, like Lamar's not really running those rooms anymore. And the people he had running them, they're not running those rooms anymore a lot of times. And I'm like, wow, this stuff is just dead. It just completely died. A lot of stuff is happening on spaces too, I've noticed, but they're not that interesting during the days. I think the nighttime discussions are interesting. When Preston Pish pops in, I would love to go into those rooms and listen because he actually has something interesting to talk about. Yeah. So it depends who's in the room now. I pop in, I look, and I'm like, let's see what they're talking about, and sometimes I'll enter into this conversation and I'll jump in, but for the most part, it kind of got boring to me.
I still have some really good conversations on Clubhouse. Like today, we had probably a good 2 hour conversation about Bitcoin security tokens with Bruce
Okay.
Fenton and stuff
I
like
like
that.
Bruce. Yeah.
There definitely is some awesome conversations that still happen, but I'd say it's like 70% of the time it's just
Bullshit.
shit that I'm not interested in hearing. But I just, I'm just in there anyways. but I should maybe take a page from your book and try to be a bit more productive.
Well,
Otherwise,
this is the thing, like all of you guys, right, have been down this rabbit hole, your case for almost 10 years, but others like Hada, like 6 years, 5 years, whatever, going on 7. I forget what his number is. Jason since like 2015, 16. And so it's old hat to you guys. It's like repeating the same shit you've been reading about for years. And so for me, it's like, I was really, when I got off a Clubhouse, I was like, okay, we're talking about it. It's time for me to go read a lot of these books I had a list of books that were stacked, and I was like sitting there reading a lot of books. So it was interesting for me to kind of go down that rabbit hole of just reading versus hearing the secondhand information that's being regurgitated. I was like, let me go read it firsthand. So that's kind of what I did for the last couple months. I just been reading a lot.
Well, you've been doing great with your podcast, man. I'm subscribed on your YouTube channel, and I see videos coming out a lot. And as a note, if you're not subscribed to Jay's YouTube channel yet, hit that bell button, hit that subscribe and like and bell and share.
I wasn't even telling people to do that initially, and I noticed it actually doesn't have an impact on the number of subscribers you get. You have to actually tell people to do it.
You got to tell people to do it. I know. Yeah, you got to tell people to.
It feels corny to do that. I know it feels weird. All right, brother. Thank you.
At least you're not doing the crypto YouTuber thumbnails yet. Like,
no, that's never gonna happen.
Don't do that, Jay. That's all I ask.
That's so corny, dude. Yeah.
Where could Bitcoin's price be going?
With like a purple background, it's bright, you know.
Oh man.
All right, cool. Thanks, Brad.
Good chatting.
All right, take care.